Good morning, everybody. Welcome back to another episode of The Market Open. It is Tuesday, April 8th. Markets are green. Well, pre-markets are green. We are going to see if that green in the pre-markets can continue as we get into the market open in about 40 minutes. And that is the first question I'll be asking immediately as we get started onto the show, which is, do you trust this green? AKA, do you think it's going to last? Now, yesterday, if the S&P 500 fell 4%, it would have been the worst three-day stretch since the Great Depression. We ended up being flat. It was still the worst three-day stretch since 1987, which obviously we had Black Monday. Jim Cramer, a lot of people were predicting Black Monday happened yesterday. And at least for the first, 30 seconds, it felt like Black Monday was happening. Maybe like 5-10 minutes, given the S&P 500 was down 4.5%. But Black Friday did not happen. I'm not muted. I know you guys are trying to mess with, dude. How are you guys trying to mess with me as soon as the morning starts? It's like you guys enjoy messing with me as soon as the freaking show begins. Like, let's find a way to make him just like mess up in the morning. But I know I'm not muted. Dude, it's a lot of you too. A lot. See, you guys are still trying too. It's like you got to be more creative if you're gonna try to mess me up. Like, got to be a little bit more creative. But anyway, last night obviously markets did not end up getting hit as badly as we thought they would get hit on Monday. Pre-markets are pretty green. I mean, look at the S&P 500, dude. 2.32% in the pre-markets. That is very close to where we topped out yesterday on that false alarm. When people thought Trump was giving a 90-day pause. That didn't end up happening, but we topped out at 523. Right now we're at 516 from 504. Last night in the morning yesterday, we were at 481. So it's a hell of a move and a switch to the upside. Look at Tesla, 215 to 241 pre-markets. Nvidia back above 101. This is why I did not sell covered calls yesterday on Nvidia. I'm just very scared at this moment, given it feels bottomy, even though obviously we don't know what's going to happen in the context of tariffs, but I think selling covered calls could maybe be not the best decision right now. Apple's up 2%. Grab, they had their event yesterday. We'll talk more about that. That's up about 5% of the pre-markets. ET's up 6%. Kinder Morgan, Steve bought a little bit of that yesterday in terms of the pipelines. That's up 3%. You got Robinhood up 4%. You got the quantum names up 6%. Oaklow's up 7%. Archer's up. Bitcoin slightly down, but it's trying to close that $80,000 level. MicroStrategy right here is up 3%. The Russell is up 3%. The Qs are probably up around 3% of the pre-market. Qs are up 2.26%. I mean, it's a pretty damn green pre-market. And I think the bigger question is, do we think it's going to last? Do we think it's going to last? 65% of you in the first 5 minutes of this poll say no, you do not think it's going to last. I don't know, dude. So, I mean, we'll talk into all the reasons why I think we're green. The most obvious reason is just like we got really, really hit from a really bad stretch. I mean, the S&P 500 fell 9% over the past 3 days. And so like you would tend to think there's a little bit of momentum after that happens. And we're seeing it right now. Now, could it be a dead cat? Yeah. I mean, maybe. We'll have Jason on a little bit later in the market close today and try to get a deeper understanding of what he thinks, if any of this from a technical perspective is all choppy or dead cat bouncy. But the other reason why we might be pumping is because of this idea. So this is what Bill Ackman just tweeted, and this is similar to what Mr. Scott Bessent said yesterday. He was also on CNBC this morning. We're about to listen to him in a second. But Bill Ackman said, some have misinterpreted my thoughts on tariffs. I am totally supportive of President Trump using tariffs to eliminate tariffs and unfair trading practices of our trading partners and to induce more investment in manufacturing in our country. I'm advocating a 30, 60, or 90-day pause before the tariffs are implemented tomorrow to enable negotiations to be completed without a major global economic disruption that will harm the most vulnerable companies and citizens of our country. To be fair, I agree exactly with Bill Ackman right here. I am pretty supportive of the idea of tariffs. I just think that obviously the implementation of this type of approach to tariffs is not the best. And giving the administration more time to be able to figure this out probably makes more sense. Now, it also is a little bit of a double-edged sword, right? Because if the administration comes out and says, "Hey, we're taking time to negotiate," to some extent, that's giving up a little bit of their bargaining power because they want the pressure to be so strong that the countries are like just immediately trying to give anything they can in a concession. So I could understand from like a negotiation perspective why they haven't announced a pause. But I think one of the things the market is, or one of the reasons the market is green right now, is because they're expecting a pause. I mean, even Bessent on Fox News yesterday said, we expect that Japan will get priority due to their speed. So AKA negotiations are going well with Japan. And then B, he said, quote unquote, maybe 70 countries have approached us by now on trade, AKA 70 countries have reached out in the context of negotiating a deal. I think this is the actual reason why the markets are up right now. Essentially, the markets feel in the next 24 hours, AKA today, April 8th, before April 9th, the Trump administration is either going to announce a flurry of deals, or they're going to come out and say we are willing to negotiate. Therefore, we're imposing a pause on the tariffs. Now, will that happen? I don't know, but again, I still believe the tariff rate that you have to imagine that they do some type of a pause, just because of, are we really going to do like 45% against Thailanders? So it just feels like maybe there will be, but if there's not, I wonder if the market cares anymore. I wonder if we're so oversold that we're just moving forward. So the pause news was real. The pause news was not real yesterday, but the market reacted to it. And I think based on some of the data points we got throughout the day, the inclination of the market right now is to feel that there will be some type of pause, even if it's not literally a 90-day pause like reported yesterday. And maybe the White House also saw, the stock market flip just like that off of the headline. And maybe even they're thinking, all right, so we can kind of fix the stock market whenever we want. All we have to do is pause this stuff. The question is if they actually go through with it and if it's meaningful enough to engage in the pause. David, thank you for the $19.99 super chat. Happy birthday. Get a couple of Saratogas on. Okay, David, first of all, I appreciate the super chat. I hope you know it's not my birthday. I hope the chat did not convince you by just spamming happy birthday like they do to all the new subscribers that it's my birthday every day. Everyone gets confused by that. But I appreciate you. Thank you for the $20. And hopefully if the market keeps going up, I can take your 20 and we can drink Saratoga water again. Hopefully that we can get done with Dasani and Aquafina. But I'm sorry if you actually thought it was my birthday. If you need me to send you back the 20, I'll send you back the 20. It's not my... Dude, you guys confuse everyone who's new to the streams. And they're like, oh, it's his birthday. Like, the nice thing to do is like a human being is say happy birthday. And then I get these tons of happy birthdays. And I'm just like, my chat is just insane. I don't know what to tell you guys, but it's not my birthday. All right, Bessent, here we go. He was on CNBC. Let's see if he said anything that got markets to get excited, and then we will keep going from there.
Now, I'm very happy to say by Treasury Secretary of the trade put. And
over the weekend, I went down to see President Trump, as I do many weekends, and I can tell you it's all President Trump's decision, and he had a view on after Liberation Day that we should go into quiet mode and let our partners think about the kind of the shock and awe that he presented. And over those following few days from April 2nd, we had I think we're up to 70 countries contact the White House for how to come and negotiate. So, I would say that the negotiations are the result of the massive inflow of inbound calls to come and negotiate. Had nothing to do with the market.
I think the market took some solace, though, in kind of a change in the perspective. Just last week, we were hearing no negotiations. Now, we're talking about, you mentioned 70 different countries. We're approaching Japan, I guess, was early in terms of placing a call to the White House. And now, in earnest, you and the U.S. Trade Representative are going to begin negotiations with Japan. I think that some of the stability in the markets, there's no doubt that's what I think helped massage the markets to some extent.
Well, look, Joe, my my advice on April 2nd to our trading partners was not to panic, don't escalate, and then we will see where President Trump is after a period of days or weeks. The response was overwhelming, so it was after a period of days, and he decided that it would be a good time to begin negotiating. The Japanese were very good actors. The president had a very good call yesterday with the Japanese prime minister that led to these negotiations. And look, the Japanese are military partners, they're economic partners. We have a substantial imbalance with them, and I'm sure that they are as anxious as we are to get this remedied.
Mr. Secretary, we spoke yesterday with Peter Navarro, and he described his view on these things as it's not enough to get to zero tariffs. You have to take down all the non-tariff barriers that exist as well. His proposal, as he's written about today, is to get rid of the VAT, the value-added tax, on top of a lot of other things. That is what it would take for us to reach any sort of a settlement with Europe. Are you in the same frame of mind as Peter Navarro is when it comes to that?
Becky, I think everything's on the table. So they're tariffs. The academic literature shows that it's actually the non-tariff barriers, which are both harder to quantify and harder to, they're more insidious because they're hidden, they're obfuscated. So tariffs, non-tariff barriers, currency manipulation, and then subsidies to both labor and industry. So everything's on the table, Becky.
Meaning that it would take all of those things for us to reach any agreement that would make any sense. I mean, the value-added tax isn't directed at us. It's a tax that every manufacturer, including those that are based in Europe, pay as well. It's more the equivalent of a sales tax like we impose here.
Well, again, I think there's going to be a lot of back and forth. President Trump is going to be personally involved in the negotiations, and we will see what our trading partners offer. For instance, there is talk of a big energy deal in Alaska where the Japanese and perhaps the Koreans, perhaps the Taiwanese would take a lot of the offtake and provide financing for the deal. So, that could be an alternative for them to come forward with that, because not only would that provide a lot of American jobs, but it would narrow the trade deficit. So
one thing that Trump said yesterday as well is that the deals they're getting or the offers they're getting from other countries, he said, I think the quote was something like, it's stuff we didn't even think we could be asking for, right? So countries are getting really creative in terms of the tax exemptions and different things they can give to American companies to avoid the tariffs, which is obviously something that Trump likes. The question is, are the deals good enough? And then are the deals also significant enough to avoid the external revenue tax service collection? So Peter Navarro thinks they can collect $600 billion in taxes with tariffs. If they strike a deal with these countries, whatever deal they get, are they enough to equivocate to $600 billion worth of value when it comes to the United States? And so I think that's why they're going to be very selective on the deals to be able to make them in a meaningful way. Now, one thing that's not good right now is this 10-year continues kicking back up. And again, Trump can't easily say that rates are coming down, because rates are not coming down, given that the 10-year is spiking. That's probably also because equities are spiking as well. You also might have China selling off our bonds, which could be getting the yields to go higher as a I guess negotiation tactic or as a retaliatory measure. We'll talk more about China in a bit, but this 10-year is still an issue, and I don't exactly know what the administration's plan is to get this to go lower.
Becky, everything's on the table.
Mr. Secretary, though, help us just understand this, and maybe it's a very nuanced answer because there's sort of a different component parts to this. So the president said yesterday with Netanyahu, quote, that these tariffs can be permanent tariffs and there can also be negotiations. We also had Peter Navarro, as Becky mentioned, and you just talked about, saying that the whole goal of this is to bring manufacturing back to the U.S. And then there's been the discussion of trying to raise revenue as a function of the tariffs. All of those different ideas, to some degree, oddly enough, are at odds with each other. Meaning, if you're successful at creating revenue from the tariffs, you're not bringing jobs back to America necessarily, though that could be an offshoot of what happens. I'm trying to understand from your perspective whether these really are negotiations, they're not negotiations, what success at the end of the day actually looks like.
Well, Andrew, lot to unpack there. And let's just go through it piece by piece. That if we put up a tariff wall, the ultimate goal would be to bring jobs back to the U.S. But in the meantime, we will be collecting substantial tariffs. As I've said, I believe on this show that if we're successful, tariffs would be a melting ice cube in a way, because you're taking in the revenues as the manufacturing facilities are built in the U.S., and there should be some level of symmetry between the taxes we begin taking in with the new industry from the payroll taxes as the tariffs decline.
Mm-hmm. Let me ask you a separate question, and maybe you can speak directly to the CEOs and business leaders who are watching this broadcast, along with perhaps policy leaders and others who are frankly running other countries. I've talked to a number of them who say, you know what, I'm going to sit back and just watch all of this play out. I'm not going to make any decisions about whether I'm going to bring manufacturing back to the U.S. or frankly, how much I need to negotiate with this administration. This is now other countries just yet, because depending on how the markets play out, depending on what you think is going to happen in Congress, depending on what you think is going to happen with the courts, all sorts of other things could happen first before I would need to make an actual decision as to either negotiating over the tariffs themselves, or if I'm a business, investing back in the U.S., because who knows what's going to happen, not just in 6 months from now, but in 2, 3, or 5 years from now, when maybe my plant would actually come on board or online.
Yes. So, Andrew, that I think that may be what some of the countries are saying in public, but I can tell you I've seen the call list at the White House, and it's substantial. We were having a discussion last night about which countries to prioritize, and I think you are going to see some very large countries with large trade deficits come forward very quickly. I think we can, if they come to the table with solid proposals, I think we can end up with some good deals. And, part of the calculus on that may be that some part of the tariffs stay on. And I actually think, as I said, that over the weekend, President Trump has maximum negotiating leverage right here, right now. And I think it would be a mistake for anyone to think otherwise. And as I said, many of our trading partners, they have queued up and they have kept their cool. They have not escalated, and they will get priority in the queue. I think it was a big mistake, this Chinese escalation, because they're playing with a pair of twos. Traditionally, if you look at the history of the trade negotiations, we are the deficit country. So what do we lose by the Chinese raising tariffs on us? We export 1/5 to them of what they export to us. So that is a losing hand for them.
What about the business leaders who are watching right now, who are thinking to themselves, am I supposed to actually make a commitment right now to bring manufacturing back to the U.S., or should I let this ride and watch all of this play out first before I make any kind of decision?
Well, and Andrew, as you know, unlike we financial market operators, business leaders, they have substantial lead time. So I am sure that they are putting together plans for what they would like to do when we finish these negotiations. So I think, again, they're not going to snap their fingers, find a greenfield site and build a factory, but I am sure that the planning has already started in boardrooms, because I spent the weekend talking to CEOs and investment bankers, and that's exactly what's happening.
I think the biggest issue, though, is that a lot of these business leaders have no idea what to do until they get clarity around, like, are the tariffs actually going to be implemented? So yeah, they might be making some plans, but the ability to implement those plans in any meaningful way is decimated until we actually get either negotiations or a pause or deals. And like, literally today is the day. We have to find something out either today or tomorrow morning, because the tariffs go into effect tomorrow. And then China's 34% retaliatory tariffs, we'll talk more about China in a second, that goes into effect April 10th on Thursday. So I would imagine, and maybe this is why the markets are pumping right now, the markets also are calling Trump's bluff on how likely it is for the specific tariffs that he wants to get implemented to actually be implemented. S&P right here up 2.6%. And essentially it's this game of like, all right, give us the announcement we've been waiting for that you're going to pause this. And I don't know if that's going to come today. Maybe it comes tomorrow morning. Maybe it doesn't come. And if it doesn't come, I wonder really like what the market's supposed to think of it. Because then I think the assumption might be, okay, so they implemented tariffs, but they'll get rid of it within like a week, right? Like it'll always be this hope that like it's just going to be gone. Because if it's actually legit implemented, I wonder how the market interprets it. I wonder if the market's going to wait for the whole business development in the United States and tariff revenue to actually play out in some meaningful way. But because I think they're going to start pricing in a lot of things that are not the best, like inflation, from tariffs, and stock prices might reflect it. Or maybe stock prices already reflect that much of that magnitude of downside, even though obviously you can get a lot more downside if we truly do have rapid inflation or things like that. So I think the market's in a weird situation right now. Obviously, my strategy has been DCA. I bought more Hood, NVIDIA, and Grab yesterday. I am not selling anything. I don't think I can time any of this. I think it's really hard to be the genius who sells at these levels and tries to get back in 15% lower. But I don't know if you can trust the green right here. And so it's kind of hold your nose and see how this ends up playing out. We'll talk more about China in a second. Let's talk about NVIDIA for a bit. There's two updates on NVIDIA that I think are really interesting. Someone bought NVIDIA yesterday, outside of myself, that has not bought NVIDIA in a very, very long time. I was very surprised to see this person pick up 151,000 shares of NVIDIA, especially because they started buying NVIDIA when it was $5. They sold a lot of it in October 2022 before NVIDIA really went on its run. So they made money on NVIDIA, but they kind of missed like that epic ChatGPT type of run. And it indeed was Cathie Wood. So ARK Invest buys the dip on NVIDIA, probably in that 85 to 95 range. I think if NVIDIA is getting cheap enough for Cathie to get back in, which I'm pretty sure, I mean, from my understanding, she had less than 100,000 shares in the overall portfolio of funds. So it's not like she has a ton of NVIDIA. This wasn't like any substantial position for her. This seems like a new position. It's definitely a new position in RKK, which is the flagship fund. And it seems like she's getting ready to get more excited about it. So I think, I know a lot of people give Cathie a lot of shit about her buys and sells. I get it. But the one thing about Cathie is she was very early to NVIDIA. Again, 2014. It's just she sold right before ChatGPT took off. And her assumption was that the software application of AI would be more important than the hardware. Obviously, that was wrong. And in the last 3 years, the hardware ecosystem, infrastructure, architecture for making AI valuable has, if you look at the semi sector, just completely gone to the moon, NVIDIA being one of those. And so she ended up selling out before the real run. But the fact that she's getting back in either means there's been a change in the research of ARK in regards to what's going on with AI and how important NVIDIA will actually be, or that's her admitting, no, even NVIDIA is getting too cheap for me to ignore. And I think that's interesting because she is someone who's been in NVIDIA for such a long time and has decided after a couple of years and a 40% drawdown to get back in. Now, here's another piece from Bernstein that I thought was really interesting this morning when I was reading it. Their title is NVIDIA, are Mexico-sourced AI servers exempt from tariffs? Our initial read suggests yes. Essentially, the whole point of the post is that the majority, which is about 60% of NVIDIA's AI servers, are exempted from tariffs. And I'll put this in the chat for anyone who wants to read the entire report. Stacy, one of the best analysts from Bernstein in the context of NVIDIA, it is really interesting, right? Because if you can make the argument, I mean, one of the reasons NVIDIA and the semiconductors have been hit so badly is because a lot of the assumption is that their servers are going to get hit with tariffs, and that's going to reduce their gross margins. Already their margins started to go down last quarter into that low 70% range. And so that's not the best thing in the world. But if a decent chunk of their servers are exempted from tariffs, especially the 73% of the servers coming from Mexico, well, that's not bad. That's not bad at all. Obviously, if we tariff the crap out of Mexico, which we're not going to tariff right now, any country that has to deal with NVIDIA, because the semis are excluded based on my understanding of the tariffs. The semis are excluded. I don't know what the timeline is on that, but Trump said the semis are not part of this initial wave of tariffs. S&P 500, look at that, 3% in the pre-markets. But given they are excluded, hopefully NVIDIA, TSM, Qualcomm, all these companies don't have to deal with the exact same tariffs that other countries are dealing with right now. But eventually, even if they are imposed, if there's some level of way to get out of tariffs in Mexico, Canada, some of our biggest trading partners for NVIDIA, then I'm not saying NVIDIA is immune to the tariffs, but maybe the extent of the damage is not going to be as dramatic as what people may be thinking. NVIDIA right here, 103.1, up 5.63% in the pre-markets. Tesla's up 4%. Palantir's up 7%. Look at that, $83 for Palantir. The Qs are up 3%. Grab's up 6%. Robinhood 5%, $37 right here. Oklo's up, Archer's up, Bitcoin back above 80,000. I mean, it's a really nice either dead cat bounce or reversal to the upside. SoFi right there, 7%. Celsius 3%. And I don't know which one to trust. I just know I haven't sold anything, so I'm enjoying the upside. And if it comes back down, it comes back down. If it comes back to 480, I think all of us are used to it at this point. So like, if we make a new low, then it's like, all right, we're going lower. But we can all withstand some of the pain down another 4 or 5% because we experienced it yesterday. But I mean, look, I think this is kind of one of the most natural reactions after a horrible 3-day stretch in the market. I just have no idea whether to believe if this is true or not. And in about 20 minutes when the market opens, we're going to see if big money comes in, if money off the sidelines, all those $7 trillion on the sidelines. I mean, if you're sitting on the sidelines, if you've been sitting on the sidelines for the past couple of years, I mean, at what point do you decide, okay, it's time to take a shot, right? I'm not saying every single stock is like dirt cheap, but there are some stocks that like are, I just don't think are going to be at these prices, barring we don't have a recession a year from now. Oh, we got a tweet from Trump. Here we go. We need a button on the soundboard for a Trump tweet, because at this point, it literally makes or breaks the market. All right, here we go. It looks like this is a bullish tweet. All right. I just had a great call with the acting president of South Korea. We talked about their tremendous and unsustainable surplus, tariffs, shipbuilding, and large-scale purchase of U.S. liquefied natural gas, their joint venture in an Alaska pipeline, and payment for the big-time military protection we provide to South Korea. They began these military payments during my first term, billions of dollars, but sleepy Joe Biden, for reasons unknown, terminated the deal. That was a shocker to all. In any event, we have the confines and probability of a great deal for both countries. That's bullish. Another deal that seems like that he's saying they'll get done. Their top team is on a plane headed to the U.S. right now, and things are looking good. Wow. We are likewise dealing with many other countries, all of whom want to make a deal with the United States. Like with South Korea, we are bringing up other subjects that are not covered by trade and tariffs and getting them to be negotiated. One-stop shopping is a beautiful and efficient process. China also wants to make a deal badly, but they don't know how to get it started. We are waiting for their phone call. It will happen. God bless the USA. I mean, yeah, this can explain the pump, baby. Basically, Trump is saying we're getting a ton of deals done, and these deals will essentially, if you read between the lines, he's saying, hey, I'm not going to have to put on tariffs because we're getting deals done. And he is trying to imply that if I had not gone through all this tariff, mania, then I wouldn't have got the types of deals that I'm getting right now, aka the plan is working. That's essentially what I'm getting from what he's saying right here. What's the plan with the 10-year? Yeah, that I don't know about, dude. That I don't know how to explain that one. I really don't. I think the 10-year is in a weird situation given what the administration wants to do. So I don't know how to make sense of it. But at least in the context of tariffs and how that affects the market just wants to know the tariffs are not going to be implemented the way that Trump said they were going to be implemented. And as long as that's the case, then markets can probably go a bit higher right now. I think he's on the phone begging to get a deal by saying, I messed up. Hey, just give me something, please. I mean, look, I've seen that perspective. It definitely feels like at some angles, right, the administration realizes they need to get a deal done because they obviously can't risk tanking the markets even further and letting some of these tariffs go into place. But I also think there's some truth, and we'll find out in a couple of days or maybe a couple hours what the deals look like. Like, we will easily be able to see, did South Korea get the best of the United States, or did the United States really negotiate something good? I mean, it'll be pretty obvious, right? 3.2% on the S&P. And South Korea does work with a surplus in the United States in regards to trades. So if they can reduce that surplus or meaningfully start importing a lot more goods from the United States, whatever that may be, I mean, we got to see what the specifics are on how they've negotiated this deal. And then we'll know if Trump and his team really did get an amazing deal done, or if this was just like a plea deal, essentially, to save them from the bad headlines around tariffs. But I would imagine in in the coming days, we'll find out. Okay, China. So Trump mentioned China. Now, why did he mention China? First of all, thank you everybody for being here. If you're just joining, the reason the markets are up right now is because it looks like Trump has put out a tweet that they are getting lots and lots of deals from different countries. And the markets are, in my opinion, expecting a pause on tariffs. And that's why stocks are up right now, because they're not expecting all these tariffs to go into effect. So China said last night, their commerce ministry released a statement stating they will fight to the end if the U.S. insists on tariffs. And China said it vows necessary actions to defend its rights. I think China has to say this. I think China has no choice, right? Like, I mean, they have to sound like they have some level of control, some level of like, hey, we're not going to back down if you're not going to back down. The quite frank reality of this is that China's economy is in no situation to be acting as strong as they're trying to act. Now, I'm not saying the United States doesn't get hurt if we don't get a deal with China. Obviously, we will. But China's in a really tough spot, dude. And they're in a worse spot than us. So it's one of those things where I think essentially at some point, either today or tomorrow, before April 10th, when the retaliatory tariffs go in place, there's going to have to be some level of capitulation. I just don't know what it's going to look like. China Embassy in the U.S., that's an official Twitter account. They added Donald Trump on Twitter yesterday, and that's it. I mean, it was like, it's just like, what is going on, right? They also posted a clip of Reagan speaking about why tariffs are bad, which was hilarious, like the Chinese embassy putting out Reagan videos. But there's going to have to be some level of negotiations around this, right? They deleted the post. Yeah, I think they deleted the post a couple hours later. But it's just weird, right? I don't like if the Chinese embassy is trying to start negotiations, it's like that's not really going to work right now. So I am very curious how this ends up playing out, what ends up happening. I think we're going to find out in the next coming hours. I don't think we're anywhere near a deal with China or the EU. I know the EU said, hey, we're going to do like 25% tariffs. Maybe that goes into effect May 16th. I know there were some rumors yesterday that the EU is floating a 0-for-0 free zone around tariffs. Like there's a lot of different things the EU is thinking about right now. But if China and the EU don't come to the table, which we've heard of South Korea, we've heard of Thailand, we heard of Japan, we heard of Cambodia, we heard of Vietnam, but we haven't heard of necessarily China or the EU yet, then I think, yeah, like, will the market also really care if our biggest trading partners are not the ones that apparently tariff us the most, according to Trump, if they don't come to the table anytime soon, it ends up happening. So I believe, again, in the next few hours, we're going to find out. Maybe this lasts until the end of April 9th, but we should be able to find out pretty damn soon. And then we should get a better understanding of how this is playing out. Why would China comply at all? Well, again, Bessent did make a good point. We import 5 times more than we export to China. And their economy is just not in the situation where they can easily say, oh, we're just going to get rid of our biggest importer. Or we're not going to give any level of consolidation to our biggest importer. Like one thing that has been true throughout all this tariff talk, and that, you know, I've tried to understand a little bit at a deeper level. The American consumer is the best consumer in the world. The American consumer is the best consumer in the world. And the American consumer is not going away anytime soon. So if every country wants the American consumer to be on their side and buy their products and import their goods, yeah, there's going to have to be some deal that's struck with the United States. Now, the question is, to what extent will there be a deal and how much damage has to happen in order to get those deals? And will there be any level of deal making that is substantial enough to avoid the earnings projections that are now turning negative based on all the tariff mania that has happened? I don't think anyone knows. I don't know if there's any master plan here. I'm hoping there is and we get some solution. I've obviously not been a fan at all about how Trump's gone about this. But at this point, I'm just hoping there's some resolution over the coming days, and we will find out soon. Ray Dalio was on CNBC. We don't get to hear from him too often. Here's what he has to say around tariffs. Let's get his thoughts, and then we'll have the market open in about 10 minutes.
Associates founder Ray Dalio posting on LinkedIn and weighing in on tariffs. He says it's more important to focus on the idea that, quote, we're seeing a classic breakdown of the major monetary, political, and geopolitical orders. This sort of breakdown occurs only about once in a lifetime, but they have happened many times in history when similar unsustainable conditions were in place. Joining us right now, first on CNBC, is Bridgewater founder Ray Dalio, and we're thrilled to have you here on a morning when we're still trying to make sense of what all these tariffs mean, Ray, and frankly, how all of this plays out. So to the extent that you can help us with the history, or at least a history lesson, if you think there are parallels, how does this play out?
Good to see you, Joe. Andrew, Joe, and Becky. I think that we don't understand how the cycle goes because it comes along about once in a lifetime. But there are orders, there are systems, and the systems break down for certain reasons, and it creates cycles. For example, there's a monetary system, and then there's a debt cycle. And so as a result, we now have, one man's debts, another man's assets. And when you build these up and you get to a point where you can't sustain that, you have a debt issue. We have a debt issue. We can get into that, but there's a monetary cycle. There's a internal political order cycle that takes us from one political order to another political order, in which there's then classically great turbulence between the left and the right. And because of disorder, particularly in democracies, there's a lot of fighting because there needs to be cooperation, compromise, and so on. And we're in the process of changing that order. In addition, we have the international world order. International world order began in 1945. There's a war. You win a war, the dominant powers get to set the rules. That was a series of multilateralism, things like the United Nations World Trade Organization, World this and World that. And that multilateralism is then breaking down for unilateralism for the same reasons. So there are these three orders related to too much debt. Debt is money. Second, internal order. How does our system work? Who's going to get control of this problem? And then number three, in addition of the five main forces, there's also throughout history, climate, acts of nature. Droughts, floods, and pandemics have killed more people and toppled more orders. And then there's also throughout history, man's inventiveness and new technologies, which is creating this transformative result.
Right.
The interactions of these is what's going on. So if we look at tariffs represent a dealing with the imbalances. The imbalance means we have a tremendous capital imbalance and a tremendous trade imbalance, which is unsustainable. And so that's the backdrop of this. Related to that is also the international conflict. How do you have dependency, mutual dependency? How can the United States be a safe country and not manufacture things and have to import them for China? Or how can China be safe in terms of having capital, an American capital? Those connections are breaking down. So that's the essence of the backdrop. When we get into the tariffs, I'm sure we'll get into it.
Well,
but that's
Ray, that's a great backdrop to understand the way you're thinking about it contextually. But let's go straight to the tariffs, which is to say, how do you think, therefore, they play out? Is there, given the history that you talk about, is there the political appeal, either here in the U.S. or elsewhere, for these tariffs ultimately? And from an economic perspective, as we're all watching the market today, it's gotten a little bit better, but obviously, folks have lost 10%. Someone said to me last week, this is like a wealth tax, except that nobody gets the money. In that, 10% of a lot of folks' wealth vanished overnight as a function of at least this discussion thus far. So what happens?
Well, mechanistically, it raises costs. It lowers revenues for companies. I mean, what does it mean for a company? It means costs are going to go up, revenue is going to go down, and capital is going to be harder to come by. And so, and then we're trying to replace manufacturing. I mean, I agree with the problems, about the fact that we don't manufacture and that there is a problem with that. But there's a structural problem of whether we can manufacture. We have a population that basically 3 million people, 1% of the population, is incredibly brilliant. I mean, they go to the best schools, they come out, they make the unicorns, inventiveness, half of which, by the way, are foreigners. And at the same time, they are making the unicorns. At the same time, what we have is 10% of the population around them that's doing very well. The 60% of the population has below a sixth grade reading level. And it's tough to be productive. So when we agree with the problem, too much debt, Secretary Bessent and others agree we should get it down to 3%. We have to get the budget deficits down to 3% of GDP. This is not, we all agree on the problem. The question is, what do we do about it? How do you create that self-sufficiency? And so from a practical point of view, that manufacturing is very difficult under this set of circumstances to create within the United States, yet it's needed.
So, I mean, he's not really wrong about that. If his take is that manufacturing in the United States and the overall manufacturing industrial complex versus China is not up to speed, like he's right. Like obviously people in the United States, our manufacturing warehouses are not as sophisticated, as strong. We don't have millions and millions of people like China does. But we do need to get there. So I think his takeaway is like, hey, we need to have American manufacturing internally, but the cost of goods, the labor, all of that tends to create a massive hurdle to be able to navigate. I don't necessarily know what the solution to that is. I mean, Howard Lutnick thinks that automation and robots necessarily could be helping. I don't think Dallio has a solution either. We got the market open in about a minute. Now, granted, Dallio's also invested heavily in China. And for anyone who's been following his work, he's been talking a long time around how the United States is an empire and that empire could eventually fall. China could eventually become very powerful. So I think from his perspective, there are some unique benefits that China has around manufacturing that the United States doesn't have. But we have all the tech. We have all the AI. We have all the unique innovations that move the world forward. And so I would bet on that over the long term. But if Trump wants to bring a manufacturing renaissance, then I guess we're going to have to see if these tariffs go into effect and if that actually creates the intended effect that Trump wants. We got about 30 seconds until the market opens, folks. We are blistering green. Against the question in the chat for everyone is, do you believe in this green? And for what I'm seeing right now, a majority of you do not believe in this green. We have 66% of you saying no, you don't trust the green, which I can't blame anyone for not trusting this. But still, it's really nice. See, it's nice to see this green. Now we just got to see if we can maintain it for the coming weeks. All right, here we go. Tuesday, April 8th, 9:30 a.m. The stock market once again is open. Wake your ass up. Here we go. Markets are open. S&P 500 opens up to the level where we got to yesterday before we came right back down based on that news headline that was not correct about the pause. We are at 522, 3.5% up on the S&P 500. 522. We are green. Palantir up 8%, $84. The Qs up 4% from 402 to 440. Not too bad. Grabby Grab up 9% on the day. Tesla almost 250, 246. That's up 5.4%. You've got Nvidia 104. That's up 7%. Again, the S&P 500 up 3.5%. Apple up 2.2%. Broadcom up 9%. Broadcom, by the way, $10 billion buyback that they introduced yesterday. $10 billion buyback. So that's also helping their stock currently right now. It makes sense. Companies at this point, if their stocks are this undervalued, probably should be buying back some of their stock. Robinhood up 3.32%, 36.64 right now. Oaklow's up 7%. Archer's up 7%. D-Wave, one of the quantum stocks, is up 5.9%. That's at 699. Bitcoin 80,000. MicroStrategy, that's up 3.3%. Russell small caps 185. That's up 3%. HIMS is up 5%. Amazon is up 5%. PayPal up 2%. TQQQ is up 9%. Triple leveraged the Qs. TLT is probably down right now because, wow, yeah, down below 90. The 10-year is not coming down. It's hard for the 10-year to come down if stocks are going up. Again, people, just end up selling the 10-year and they get back into stocks when this stuff happens. 4.25% on the 10-year, not what we want to see, but the stock market doing okay. S&P 500, again, holding that 3% range right here. Williams-Sonoma is up 4%. Marathon's up 3%. CleanSpark's up 3%. You got Novo Nordisk up 1.62%. Let's look at the semis. They're probably green across the board. They are green across the board. AMD, 4%. NVIDIA, 6%. SMCI, 7%. Intel, 2%. TSM, 3%. Marvell, 8%. ARM, 7%. Lam Research, 4%. Dell, 5%. ASML, 3%. Broadcom, 7.7%. Again, we're really green. It's only 2 minutes into the market open. I am curious how the day plays out, though, and if we get any tariff deals, if that continues to accelerate the green, or if this is one big ass dead cat bounce. And we are going to see some pain from this either today or in the coming days. But I think the tariff headlines will give us a lot more clarity on what happens there. In terms of the Mag 7, Apple 3%, Microsoft 3%, Meta 4%, 540, 470 to 540. I mean, even if you're just trading what happened over the past couple of days, there's some incredible moves to be making to the upside and to the downside. Google right here, 153, that's up 3%. Amazon 4%, Nvidia 5%, and then Tesla 5%, 245 on Tesla right now. I mean, look, if you bought the dip over Thursday, Friday, or yesterday, you can't be that upset. Granted, no one knows if that's the bottom, but the whole point of DCAing is that you're taking your best intellectual guess around when you think stocks are getting cheap enough. S&P 500 right there, 3.2%. SoFi as well, up 7%, 1046 on SoFi. But as of now, anyone who bought the dip probably feels good over the past couple of days. I mean, you can't feel too bad if you take a stab at this. And what's interesting now, and this is where we get into psychology around the market. Let's say you didn't buy the dip over the past 3 days, which was, again, the worst 3-day stretch since 1987. Let's say you just didn't buy the dip. Let's say you said, nope, I don't trust it. And let's say today's just a preview of what's about to happen. And then tomorrow we're green. And then Thursday we're green. And then Friday we sell off a little bit, but then Monday we're green again. I mean, you're going to have a lot of money on the sidelines that feels like, holy crap, did I miss a once in a generation opportunity to buy stocks down 15%, 20%, some individual names down 35, 40% across the board because of this tariff stuff that wasn't even real? If that ends up being the narrative over the coming days, I mean, I think there's going to be a lot of FOMO, a lot of money that starts chasing. Now, the opposite narrative is that this is a dead cat bounce, and then we go back down to 480 on the S&P, and everyone's sad again. But I think the opposite could play out, and we've seen that play out time and time again, where people just get so excited. I mean, this is basically what happened on August 5th, right? People felt like they were getting out of the markets, the yen carry trade, the world's ending, and then within a couple of days, they realized, holy crap, I can't believe I just missed this opportunity, and then more money starts chasing, and we start seeing a compounding effect. Maybe this ends up playing out the same way. Yeah, Grab is up 10%. I talked a lot about Grab last night on their product event. I thought they introduced some really amazing products last night. The presentation itself wasn't amazing. Most companies in the Southeast Asia region, they don't really have product events, so I didn't expect the production to be amazing. So it's really unique that Grab even chose to do it. Also, it was their first event, so just from a technical perspective, the event wasn't the best event, but the content of what they announced at the event versus that PowerPoint they presented it on was really important. And I think it's going to drive more user engagement, more overall user growth, more revenue growth, all that stuff. So I'll be talking about it more on Twitter later today, and I'll do a detailed post. But if you want to see my coverage last night, you can go to that video from yesterday. Overall, very impressed, and they deserve to be up 10%. I mean, they don't deserve to be below $4 anyway. So I think we should get a recovery in them if the market recovers as well. Nvidia right here, 104.4. That's up 7%. Nvidia, new high of day. New high of day. Fear and Greed is now 5. Fear and Greed is now 5, which is not bad. That's a little bit up from 4. Where's the trade desk? TTD. This one's been stuck for a while. Wow, $48. Holy crap. This thing was 70 last time I saw it. At least it's up today. But yeah, this one's been decimated, down about 65% after earnings. So this one has been a big loser this year. You would think this is close to the bottom, but I don't know enough about the business to understand that. But you got that one up a little bit here right now. Palantir up 8%. I mean, yeah, dude, look, I know Palantir's expensive. I'm not saying it's not expensive. It's been expensive for a while, but it went down to 66 yesterday, and that's because the market fell. Palantir independently, I think, just has so much firepower, so much juice, so many diamond hands, so much momentum, so much aura, if you want to call it that, it's hard for it to independently tank 10, 15% while the market's pumping. Because Palantir, by the way, is in the top 10 traded stocks on Robinhood, Fidelity, and Vanguard. These companies put out a list of the top 10 traded stocks on a daily basis. At least Vanguard and Fidelity do. Robinhood does it on a monthly basis. Palantir's up there. So, I mean, it really has become a big part of the market, even if a lot of people don't even know what Palantir does and they just got into it for the hype. But it is now one of those things. NVIDIA, by the way, is number 1 across all 3 of those. So I think it's hard, unless Palantir messes up on earnings, for them to meaningfully fall, besides having the market fall with them. And I just have enough faith that their earnings are going to be pretty strong. S&P getting a little bit of a red candle right there, 2.84%. So it's down from 3.5. So you're getting a little bit of, there you go, 522 to 518. Probably seeing the entire market get, Tesla, Nvidia, all of them. There's that V shape to the downside, but still holding on to some of their green. Where's China? FXI. China is green as well. China's up 4%. Okay, so China's green. The 10-year is concerning to me. Yes, and you know what? The 10-year is concerning because if Trump's looking at that yield and he wants it to go down, is he going to tweet something that is like, aggressive for the markets to create more volatility? Potentially. But what he just tweeted about South Korea was really bullish. Again, for those that didn't see the tweet, what he just said about South Korea, super, super bullish. I mean, he's basically saying, hey, we're getting a ton of deals, and those deals are about to go into effect. And, he believes China is close to wanting to make a deal as well. So this is not something you tweet to get the markets to go down. I mean, this is a pretty easy tweet for people to interpret as bullish. But obviously, I think everyone is a little scared that this could be a dead cat bounce. At this point, we've dealt with a few. I mean, the real dead cat bounce was from 548 to 576 on the S&P. That was like the official dead cat bounce. That's when I bought Saratoga Water, and we saw what happened after that. And now we're back at 520, up from 481. Either that 480 to 520 is going to be a second dead cat bounce, and we go a lot lower than 480, or that's it. The pain is done and we can move forward. I don't know. We're going to find out in the coming weeks how this plays out. Nvidia back to 102. Yeah, so all of these stocks getting a little bit of a candle. 105 to 103 on Nvidia. Still up 5.6%. I mean, I don't think anyone's complaining about that. Like, Nvidia erases this 5% and we go neutral, then we got something going on. Same thing with, the S&P, the Qs, etc. Like, if we take away a majority of these gains, then this was a tradable kind of rally versus like a sustained, meaningful reversal at this point. Any pump before April 9th should not be real. Well, we got April 9th tomorrow. We're going to see what this ends up looking like. Check defense stocks. Okay, Lockheed Martin, that's up 3%. Palantir's obviously up. And then Raytheon is also up 4.5%. I don't think there's any defense stocks headlines this morning, but those are up along with Palantir, up about 7% right now. We don't know what time the tariffs are activated. I think, if I'm not wrong, it's 12 a.m. So like literally tonight going into tomorrow morning. I could be wrong on that, but it happens tomorrow. Not sure exactly when, but it will be happening pretty soon. What's red besides TLT? That's a good question. WTF, that financial IPO from Hong Kong, that's red. Newsmax is green. CoreWeave, look at that. CoreWeave's up 4%, dude. That's an IPO. You want IPOs good quality IPOs to be green. It just gives a lot of confidence to the IPO market. I don't know what's red. All the semis are green. All the cryptos are green. All the Mag 7 are green. All the fintechs are green. Coinbase, SoFi, Affirm's up 7%. PayPal, Block, Robinhood. All the SaaS names are green as well. Look at that. Intuit, Zscaler, CrowdStrike, Cloudflare, ServiceNow, Adobe, MongoDB, Salesforce, Oracle, Palantir, Snowflake, Confluent, Datadog. Is pharma green? I believe so. Eli Lilly is green. Novo Nordisk is green. The banks, the financials are green. Pfizer is basically flat. It's not really red. United Healthcare is up 7%. Look at that, dude. That's the biggest, or that's one of the biggest weightings in the Dow Jones. Up 7%. That's the Dow trying to recover right now. GameStop is red. Okay, so that's your red. Baba is China red. Baba's slightly green. It looks like it might go red. Gold, where's gold? Let me check. Gold prices, they were down for the past 2 days. Gold is up 1.3%. Gold's up $41 today. 3,008. Gold is up, so that's not red. The names that are red are not. Oh well, okay. So you got your value names that are red: Verizon, Crown Castle, American Tower, Rocket Companies. So these ones are more red than not. Even Snapchat's green today. Berkshire has to be green because of Apple, most likely. Yeah, Berkshire is green, up 3%. So I guess your traditional value kind of quote unquote safety names are going red. Nvidia still up 6%. Grab up 11%. While the S&P continues to hold on to 3%. Which is not too bad. Where is Fartcoin? That is a good question. Okay, Fartcoin is up 27%. See, like, I don't know if this like, oh, this is great. Like Fartcoin's up 27%. It's like we should risk on, or it should be like we have too much froth in the system and you need to sell it all because Fartcoin's up 30%. Like that part, it's always like, I don't know how to judge this metric anymore. I don't. But to be fair, when the markets were tanking on Friday, I actually forgot to cover this because I didn't look at Fartcoin because I was too busy looking at the carnage in the S&P. Fartcoin was up 18% on Friday when the S&P fell more than it did on 9/11 in the dot-com bubble. So the 10-year right here, 4.241. So the fact that Fartcoin was green on a day where the entire markets collapsed worse than what we've seen in 20 years, it kind of is telling me that Fartcoin is just Fartcoin. It's in a league of its own. And at this point, I don't even know if you can correlate it to anything else. Now, this 10-year going up is not the best thing in the world. Maybe the Trump administration is not going to care about it anymore, but that is one of those things they have to deal with. You know, maybe, and I think this is one of their negotiating parts of the deal could be, hey, you have to buy up our treasuries. Like, what if they went up to every country and was like, you have to buy, I don't know, $50 billion worth of treasuries over the next couple of years, right? And they're like, and get rid of the tariffs or something. Because if they really want to get yields down, one of the ways to make that happen is just get countries to buy their bonds versus like tanking the stock market to get people to be scared enough to buy their bonds. Granted, I don't know if every country is willing to buy that much of U.S. debt, but that could be another way they try to negotiate something to get what they want as well, without necessarily having to tank stocks to get the same outcome. But I don't know. We have to see if that actually plays out the right way. Okay, everyone should be green today, right? Yeah. All right. So how much is everyone up today? I just opened the port. I am up $51,000, $53,293. Okay, that's a nice day. It's fun. It's not bad. I mean, I'll be ready to lose all of it tomorrow when Trump implements the tariffs, but at least we get a day of reprieve. It's like maybe things are going to hit the fan again tomorrow, but at least we get a day to like just see a little bit of green once again. All right, everyone's base. Look at Elaine, dude. 483 grand. All right, that's a nice day. It's not too bad of a day. Shout out to Elaine. Himant's up 4K. Lil J's up 10K. Most of you guys up about 3 to 5% is what I'm seeing. It might hit the fan in 30 minutes. Look, I don't disagree with you, dude. I mean, we are one tweet away from everything just going right back to where we were. At this point, I'm truly becoming desensitized to it, dude. Like, again, I told you guys, I'm not selling. That's not my plan. I'm not trying to time this. So if it goes up, if it goes down, it's just numbers on a screen at this point. And like, we'll see what happens over the coming years. But I think a lot of us are getting desensitized to it. Look at the S&P, bro, back to 3.2%. Had a little bit of a weakness back to 518, and it's right back to 521. That is some incredible strength. That's either algos with incredible manipulation to get us to believe that we're so back, or legit money is coming in and they're buying. That's really, look at Grab up 13%. I did buy a decent chunk of Grab yesterday, so that is looking nice. But again, if the S&P falls below 480, Grab's probably going right back down to that low $3 range. Apple right here, 187. Broadcom, 168. Robin at $37, up 5%. I mean, it's green, baby. We are definitely seeing some serious green. Nvidia right here, 104.79 currently right now as well. Rocket Lab, where's Rocket Lab? RKLB. Rocket Lab is, wow, 9% on the lab of rockets. $19. You know, Rocket Lab has done a decent job holding 15 to 19. I know it touched 15 yesterday because of like the downturn, but I mean, realistically, 17 to 19, it's been stuck in that range. And if you're a big Rocket Lab bull and you just really do believe this thing's going to be SpaceX one day, I mean, yeah, could it go back to $10? Sure. But it's given a pretty nice base, I feel like, to at least DCA if you're like super, super bullish at an $8 billion market cap right now. And, you know, if I'm not wrong, I think they'll be profitable in a couple quarters, which will be really good for them just maturing as a company. So Rocket Lab right here, 1903. That's up 8.59%. Let's look at some equity reports. So Netflix replaced Disney at Morgan Stanley as their top pick. So you got Netflix right here. That is up 5% of the day. They write, Netflix is our newest top pick. We see ad revenues nearly doubling in 2025. Ads are only 10 to 15% of growth. And we believe that the most recent engagement reports reinforces our bullish view as Netflix leverages originals, licensed content, and its global studio to drive member value. Venture Global up 18%. That's incredible. So you got VG that's up 18%. So Netflix right here up 5% on this Morgan Stanley new top pick. We also got Apple that got downgraded. Apple from 200 to 170 with an underweight rating at KeyBank. I think a lot of other firms yesterday decided to downgrade them as well. They said, going forward, while we don't quantify tariff impact, we believe there is uncertainty, the impacts of higher average selling prices, which in turn could impact demand. But there is also concerns of a broader consumer spending impact globally, as well as nationalism movements regionally that make putting out a confident estimate difficult, though we remain below consensus. So pricing in a little bit of the instability across the world based on a lot of the tariffs and retaliatory tariffs as well. White House economic advisor Hassett just said, getting ready to present a plan to Trump on who and when for tariff talks. Okay, cool. So that is consistent with what Trump said this morning, which is that they are getting a lot of deals and negotiations done. So one of the White House economic advisors just said they're getting ready to present a plan to Trump on what deals they are making, how they're going to get those deals done, and ultimately the implementation timeline of these tariffs. So that's encouraging. That is encouraging. I do think today's going to be a pretty crazy day where we are going to see more deals than not get made, hopefully. And that is probably why the markets are pumping right now. So we had Apple, we had Netflix, S&P 500 again, up 3%. There's another stock that got, I believe, upgraded. Oh yeah, Morgan Stanley. So Morgan Stanley reiterated Tesla with a 410 target. They said the recent market calamity due to in part of the U.S. tariff situation has raised deeper questions among investors about the state of the U.S. economy, the benefits of advanced AI technology, and the evolving geopolitical balance of power. Within our coverage, no other stock is so clearly identified within the volatile debate around trade and politics as Tesla. Regardless of the near-term policy path, we believe the march of embodied AI will see a proliferation of machines embedded with sophisticated robots that navigate and manipulate three-dimensional physical spaces powered by agentic software foundation models. A lot of fancy words to say, hey, we like the robots. And they reiterated their 410 target at Morgan Stanley. Tesla right here up 3.8%, down a little bit from that 246 level, now at 241, but still green for the day. What else do we have? In 30 minutes, there's no interview. I think people are just like saying that the 10:30 slam, which tends to happen, is in about 30 minutes. And so that's what we might see. I don't think there's anything happening in 30 minutes. If there is, let me know. I don't think there's any big interview or anything like that. But yeah, I mean, usually around that 10:30 time, we start to see a little bit of a slam. We're not seeing that yet. Seeing a very slight haircut off the very top, but most of these stocks holding onto the green, we're not really reversing for the day yet. We are continuing to hold on right now. S&P highest volume since 2022. Really? S&P 500 volume is 20 million. I actually don't know what the average volume is for the S&P. SPY is 20 million. That does seem like a lot within 20 minutes. Now average volume is 86 million. So we just did 25% of the average daily volume in 22 minutes of the market open. Wow. That does seem like that's pretty aggressive, dude. I don't know if we've seen in 22 minutes that same type of volume. Obviously, markets are green and people might have felt they missed the bottom at 480. So there could be a little bit of chasing right there. Tesla volume's at 23 million. Palantir volume, NVIDIA volume's at 79 million. I think NVIDIA does like 400 million shares a day though. Palantir, 24 million. Palantir has been traded more than the S&P. That's so cool. I guess we're going to see how this turns out through the end of the day. Hassett says the Fed will decide interest rates. We respect their independence. Okay, so Hassett is saying the right things. The question is the market going to jive with it? Hassett, again, was the guy who said something about a pause. He didn't say anything about a pause. He answered a question about a pause yesterday, and then Goldman Sachs came out with the headlines. White House economic advisor calls for a 90-day pause. That wasn't true, but that's what created the pump yesterday, and we're seeing the continuation of those levels currently right now with a pump right here at the market open. We didn't hear from Tom Lee in the morning. Let's go to him. We didn't get to play him. So here's Tom Lee on what he thinks is going on in the markets and where he thinks this is going from here.
When you try and do direction and duration in the same way, we always go, I don't know how you expect to do that. So in this point, at this time, you didn't really anticipate that formula, I think, that was going to be used to arrive at such high tariffs. Kind of maybe got blindsided by that to some extent. But with that in mind, you still think we're starting to see signs of a Trump put as of yesterday. Maybe the NASDAQ closing higher is an indication.
Yes, that's right. Markets are stretched to the downside because we lost, almost 13 percentage points in 2 trading days. As you know, it's almost like the stock market and the economy was delivered a heart attack from the terms of those tariffs. So I think that there is a bounce underway. Mark Newton, our head of technical strategy, views this as a technical rally. I think something that can take us, to recover towards 5,500 or something like that. But I do think that there is the challenge is going to be, we don't have a fundamental clarity and sort of the all clear enough for us to say that that's going to push us back towards new highs. So I do think we're kind of stuck in the near term, but yeah, I think markets overreacted to the downside. And yesterday, it does look like the messaging has switched. The president has moved towards to letting people know they're negotiating. And I think that's a return or a quiet return of the Trump put, because I don't think they want markets to continue to have this heart attack.
So you many times talk about your technical analysts, and a lot of times that doesn't involve trying to gauge what's going to happen with fundamentals or certainly not policies. But in this case, you got blindsided a little bit by something totally unexpected in your view for the size of the tariffs or the level of the tariffs. Why do you feel confident that we're in negotiation phase now, and tomorrow we might be back out of negotiation phase? You could get blindsided again. I mean, that would throw off your 5,500 target, wouldn't it?
Joe, that's right. One of the things, we've spent,
AKA, why isn't this a dead cat bounce?
a lot of time talking to investors between Wednesday, Liberation Day, and over the weekend. And, it's clear to us investors feel that not only were these tariff levels absurd in the sense that it was very difficult for people to understand the calculation, but it really did break a covenant with capitalism. The idea that businesses need stable and predictable regulations. Many companies moved their supply chains in 2018 because of the need to move away from China. And now they have, potentially trillions of dollars of stranded capital again because of these tariffs. So I think that's the seismic shock that's very tough for markets and the trust that's been broken. It doesn't mean that we can't see a level of clarity that helps restore that trust. And so markets, after this waterfall decline, one scenario is a V-shaped bounce that takes us back to the previous levels. But the reality is it's going to, I don't know what that sort of clarity that's required for that is. So I think it does feel like this will take some time. And one very good friend of mine is Tom DeMark, and he says this reminds him of 2011. I think that that's not a bad way to look at it, that it's going to take a little time for markets to regain some trust.
We'll finish with Tom Lee in a bit, but I think that's a fair point. I mean, he apologized yesterday to his clients about how they completely misread the tariff situation. And realistically, he was apologizing for the fact that they couldn't believe Trump would go this far with the implementation of tariffs. They thought it would be 10, 20% across the board, and the market had priced that in. Like a lot of us thought. They didn't know it would be these reciprocal rates. Having said that, we still have 24 hours before those reciprocal rates actually go into effect. And so that's why I think Lee's being a little bit more bullish on the fact that we can recover from this. In terms of Elon, so we have some headlines on Elon right now. First of all, yesterday, I showed you guys this in the market close. Kimball Musk, which is Elon's brother, significant shareholder of Tesla. He's on the board of Tesla as well. He went on a tweet storm about why Trump and this tariff policy was the dumbest thing in the history of American presidents in regards to trade policy. And this was one of many other tweets that he had later throughout the day, basically saying that Trump is an idiot. My interpretation of this is Elon told him to tweet this, or Elon at least co-signed it. Elon can't physically put that out there because of the relationship with Trump, but Kimball can say whatever he wants, right? And I think Elon was just like, dude, someone's got to say something. Like, this is stupid. There was also a Washington Post article yesterday. I don't know if this is a confirmed headline, but this is what they reported. Elon had privately asked Trump to reverse some of his stance on tariffs. Trump ended up saying no. But there was a little bit of tension there because Elon does not really think, in my opinion, based on Kimball tweeting this and what we're about to look at, that these tariffs make a lot of sense. Then you had Peter Navarro say this yesterday on CNBC.
When it comes to tariffs and trade, we all understand in the White House, and the American people understand, that Elon's a car manufacturer, but he's not a car manufacturer. He's a car assembler in many cases. If you go to his Texas plant, a good part of the engines that he gets, which in the EV case is the batteries, come from Japan and come from China. The electronics come from Taiwan. The tires come. What we want, and the difference is in our thinking and Elon's on this, is that we want the tires made in Akron. We want the transmissions made in Indianapolis. We want the engines made in Flint and Saginaw, and we want the cars manufactured here. It's like this business model where BMW and Mercedes come in to Spartanburg, South Carolina, and have us assemble German engines and Austrian transmissions. That doesn't work for America. It's bad for our economics. It's bad for our national security. We want them to come here. And with Elon, it's fine. He's a car man. He's a car person. That's what he does. And he wants the cheap foreign parts, and we understand that. But we want him home. We want him home
Peter,
for our national security and economic security, and everything's good with Elon.
Well, everything's not good with Elon. Elon says Navarro is truly a moron. What he says here is demonstrably false. Again, you got Elon's brother that says tariffs are stupid. You got these articles that are reporting that Elon asked Trump to reverse some of his stance on tariffs. And then you have Elon publicly saying Navarro's an idiot. And then he says Tesla has the most American-made cars. Navarro is dumber than a sack of bricks. Okay, so he doubles down on his comments around Navarro. So, look, what is the takeaway from this for investors? Well, I think the takeaway here is that Elon might not be the most enthusiastic around the tariffs. He's probably very happy that Trump is president, and he would probably not change a single thing around supporting him. But when it comes to individual policy decisions, I mean, he's not going to agree with everything the guy does. And it is pretty obvious. Wow, S&P 3.6. That's almost a new high of the day. That's incredible. We are blistering green, folks. It might mean that Elon really does not think this tariff policy is the right way to do it. Also, I mean, there's an elephant in the room, and that elephant comes from China. 25% of Tesla's revenue comes from China. And so if we tariff the crap out of China to the tune of 104%, yeah, that's not going to be the best for Tesla. Even though they will survive that, right? A lot of their business still is in the United States. They make a lot of their cars in the United States. But that, just the overall trade relations when the United States is beefing with China like that is probably not the best for Elon. So I think he's kept pretty quiet publicly outside of tweeting some Milton Friedman clips as like a subtweet around why tariffs are not the best thing. But he can't literally go against Trump because the media they would love that narrative if there's like a real beef between Elon and Trump, and he probably doesn't want to encourage that. But he also, when it comes to Navarro saying some of the stuff he's saying, he also can't condone that either. Tesla, regardless, up 5% right here, 245 on Tesla. Netflix up 5.74%. Rocket Lab's up 10%. Berkshire's up 5%. Alibaba's up 1%. GameStop's up 2%. The pharmaceuticals are up. NVIDIA, 7.5. That's a new high of day for NVIDIA. 105. 105 on NVIDIA. Amit, talking about your bricks. Are your bricks American made? Dude, these bricks, not only do they come from America, I installed them myself, okay? Using American cement and American products. Like, I think I did a hell of a job too. They haven't fallen off for 4 years at this point. So, yes, absolutely, bricks are American made. And, I'm proud to have American bricks in my room. Venture Global, 23%. That one's green as well. So, the liquefied natural gas space, what about next decade? Is that up? That is, oh, wow, 19%. Holy crap. I mean, as crazy as these percentage gains are, it also makes sense because, we were so low, right? So we're kind of just getting back to levels that are still significantly lower than where we were a couple of weeks ago. But it makes sense if you think there is some reversal happening. Look at the S&P, high of day, 523.4. It is 0.2% away, 20 bips from being up 4% on the day. Wow. That's a nice little run. Palantir just hit 85. Look at that. Dude, I know I say this every day, but you've got to admit, Palantir has been one of the most resilient. The amount of people, and look, it could still happen. I've said it every single day. I've said it's expensive. Like I've given those disclaimers every single time. But the amount of people that said this thing would be $20 by now, $30 from now, they said, hey, this is Tesla in 2022, where it ramped up in October 2021, peaked at 414, then came all the way back down to 250, 230 by then. And ironically, Tesla's still at 240 right now. It hasn't happened yet for Palantir. It hasn't. And my belief is that if it happens, the whole market's going to collapse with it. It's not going to be Palantir independently. I think there's too many variables to allow Palantir to independently fall. But the people that were calling for that, this thing should have hit $30 by now, or at least 40, at least 50. And we haven't seen that. I think the lowest we got to was like 61 back in January. So now again, if you count the 125 thing, I don't know, dude. I don't count that 125 as like part of Palantir. It was there for a couple of days. The whole market was going crazy. And to me, like a real decline, when people started saying, all right, Palantir is going to fall, they were talking about when it hit like this price, 85.95 around November 2024. When it hit these prices, that's when they said, all right, it's time to go back down to 30, $40. The 125 thing, yeah, if you count 125 to 85, yeah, that's a decline. If you bought at 125, you bought at 125. But I think the majority of people knew that it was getting too aggressive at that time. And just it wasn't as sustainable as people thought. But freaking 70 to 90, it's been holding all year. And I think it's a testament to the street's overall belief in this thing. If the only way to take it down to 66 is for the S&P to fall 5%, give me that any day of the week, dude. I am absolutely fine if that's how the price action is going to play out. Look at the S&P, 524. It is 10 basis points away from being up 4% on the day. 4% on the day. All right. Do people still trust this green or no? Do people still trust this now? Is it getting our trust? Okay. So the poll, 66% of you said no. I'm going to do the poll again. Is this a bull trap? I'm not saying I trust it. I'm just saying I'm getting pretty damn close to getting a manicure and pedicure today. That's all. That's all I'm trying to say. Not saying I trust it. Just saying I'm pretty damn close to getting my mani-pedi. But no, in all seriousness, obviously I don't know whether to trust it or not, but I'm not selling either way. So to me, it's also all right, we can theorize about if it's real or not, but it's not like it's influencing any of my decisions when it comes to selling. So granted, people that don't trust it and you want to sell into the rip, I don't blame you. Preservation of capital is very important, right? If you bought Tesla at 215 and it's at 250 and you think there's no way in hell they can survive after their Q1 earnings, Steve wrote an article yesterday and he's bullish Tesla long-term, but he really does not think that earnings are going to be good. I mean, yeah, maybe you sell into the strength and take your quick profit, right? I could definitely see that playing out right now as well. Amit, what is Hoover? Okay, am I the only person that didn't know yesterday on Robinhood Weekly that Hoover is a vacuum brand? Like Roy made a pun with the word Hoover in it, and I was like, I don't get it. He's like, what do you mean you don't get it? I was like, what are you talking about? He's like, it's a vacuum. I was like, what? It's a vacuum? Am I the only one who didn't know that? But apparently everyone in the chat knew that Hoover was a vacuum. Okay, what do the polls say? Wow, 64% of you say it's a bull trap. So still, the majority of you are not believing this. The majority of you are just not believing this, which is fair. It is fair. Wow, all of you guys know Hoover? Dude, I promise I had no idea what Hoover was. Like, I know what Dyson is. Like, I know that brand when it comes to vacuum. Hoover. What the hell is Hoover, bro? Wow, everyone's saying yes. I know who Herbert Hoover is, but that's what Roy made a joke around Herbert Hoover, and he connected it with like the vacuum. And I was like, I was like, dude, what? I just laughed. I was like, but in my head, I'm like, what the fuck did this guy just say? Like, I realized in life, I've been in many situations where I just laugh and go along with the joke, and I have no idea what the joke is, bro. Like at AIPCon, I don't know if you guys saw it when I posted the video. I think I asked a couple of, or the concept of movies came up. I don't know how during the interviews, and they said like their favorite movie, and I was like, oh yeah, that's a great one. In my head, I'm like, what movie is that? What is he talking about? I've never heard of this movie. Sometimes you just have to go along with it, bro. Because it's more awkward to be like, can you explain the joke? Like, no one wants to explain the joke, you know? So sometimes you just gotta laugh it off. Wow, all of you guys know Hoover. I did not know it. All right, let's finish up with Tom Lee, and then we'll keep going from there. All right, here we go.
But we did see, Tom, that huge roar back yesterday on the false rumor that suggested that they were going to pause, the administration would pause for 90 days while doing this. So the market may have broken trust, but it's very eager and really hoping, it sounds like, for some relief to come from this.
Yeah, I think so. I think that there maybe were some, that's almost, if that was a trial balloon, it worked. It showed that if there was conciliatory actions that were sort of friendly to businesses, that the market could have a massive, massive move. The idea of like an exporter tax credit, these things really can restore confidence, because at the end of the day, the entity caught in the middle of this has been companies, and the capital that they've invested, they need to earn a return. That hurts shareholders, but it also hurts all the employees that work at these businesses. So I do think that the ripple effects, looking back, it does make sense why the market had a heart attack. But of course, this also means parts of this is very fixable, but it does mean that there's, a bit of time involved.
So Tom Lee's argument is that we can fix this, which, I mean, yeah, why couldn't we, right? We absolutely can fix this. The question is just, is Trump going to be willing to fix it? This is the, I'm trying to get these Hassett clips about reciprocal trade. We'll see if I can get this interview in a bit. But I think that Lee's claims, again, are very similar to what we are all thinking. I mean, it's literally what Ackman has been saying as well, which is that this is reversible. We don't have to withstand the level of aggression in these tariffs if we just reverse course or we get a bunch of deals done. S&P still green. Trump is not live. Why do you guys say Trump is live? I know Trump is signing some stuff in at 3 p.m. I think he's doing some executive orders, but I don't think he's actually live right now. Yeah, he's not live. He's not live right now. He'll be live at 3 p.m. I'll probably be streaming that for the executive orders. Okay, what else do we have? Tesla's green, S&P's green. Tesla up 6%. Wow, 247 on Tesla. This thing was at 214 yesterday. Tesla as well, dude. I mean, like, I don't know what earnings are going to look like, but it is going up and down with the broader markets versus necessarily trading independent of them. Grab right here up 10.7%. Nvidia 104, that's up 7.4%. The Qs are up 4%. Apple's up 4%. Nice rebound on Apple. Now here's the thing. It's weird that Apple's up 4% or Amazon's up 5% when the tariffs on China are still going into place, which is the whole reason Apple and Amazon fell so aggressively. So I understand Apple and Amazon pumping with the broader market, but realistically, these two stocks should not be moving higher if the tariffs on China are still going to be what we have in effect. I think them going up 5% each is the market saying we don't believe that the deal or that the current state of tariffs that Trump has imposed are actually going to go through. Now, it could also be a bull trap, right? That could also be just the definition of a bull trap. These stocks don't have no business going up. They're green right now, and that's sucking a lot of people in, like a Hoover. No, that was good. Or it's hey, the markets are saying, no, these aren't real. Like, we don't think that the Chinese tariffs are going to be the Chinese tariffs. And as a result, we believe there's a lot of momentum to the upside because Trump will renegotiate on these tariffs. Here's my favorite analyst, or one of my favorite analysts from Evercore, Julian Emanuel. Let's get his thoughts on the market, and then we'll keep going from there.
Even with the price target cut, based on what we've seen over the last few days, where does the bullishness come from?
The bullishness comes from an expectation that if we look at the last couple of weeks, we have arrived at the point of maximum uncertainty, okay? And it's like, whether you think about it in terms of market volatility, uncertainty measures, frankly, tariff rates, which is the crux of where the uncertainty is from, all these things really aren't sustainable in the long term, because what ends up happening is you get the recession scenario. And I think as an investor, you have to believe a couple of things here. You really have to believe that uncertainty is arriving at peak, and you have to believe, and we do, that Washington has no desire to precipitate a recession, because frankly, precipitating a recession has a lot of other knock-on unintended consequences.
None of us can get into the minds of the president. I've got no idea what he's thinking this morning, going ahead to the tariffs that will kick in overnight. Can we touch on valuations? What's the forward multiple on the S&P right now?
It's well over 20 still.
Does that speak to maximum uncertainty?
It does not, okay, but we have maintained this for 2 years now, and it's certainly worked reasonably well.
Now, the reason it's worked well over 2 years, again, the S&P forward multiple being well over 20, that is historically the sign of something that is aggressively valued. But in 2023, 2024, it's worked for two reasons. Number one, you had earnings growth go out the wazoo, like Nvidia, right? Just insane earnings growth. So, investors have said, okay, we'll pay the premium for this growth. And number two is because we've had certainties. There's been some uncertainties here and there, but overall, we've had a trade policy that was certain. We've had a president who, quite frankly, didn't speak a lot, like Joe Biden, so there weren't that many headlines. And so the market could just reasonably move forward. Can we keep a forward multiple above 20 on the S&P 500 over the next 4 years with the level of uncertainties that come with the Trump administration? I think that is also a very big question for a lot of these analysts to think of.
Over the last 2 years, is that valuation alone doesn't end a market cycle, okay? What ends a market cycle is an oncoming recession, an uncooperative Fed, or bond yields moving higher. And if we think about the last couple of weeks, look, there have been two significant wins here. Number one, oil prices are a lot lower than I think any one of us would have expected,
Agreed.
Given the fact that Russia and Ukraine is still in escalation mode, and the Middle East is still in escalation mode for the most part. And bond yields have
you went
also
through
come
three
in.
things, and I was just thinking, tick, tick, tick. Fed's showing no willingness to step in. Yesterday, bond yields were higher. What's the circuit breaker?
So you have to differentiate between a Fed willingness to step in and a Fed who's going to say inflation, which now in our view is in the mid threes for 2025. I don't think he's going to remove the word trend.
Wow. They have mid threes for 2025. That's because of tariffs. So, Evercore is basically saying, yeah, we think the tariffs are going to create increased inflation, which means if we're in the mid threes and the Fed wants 2%, it's just going to be hard to justify a cut.
Transitory, because and our research shows that essentially the real threat is less inflation. It's the one-time hit from wherever we go. And our operating view is that tariffs will actually settle in around 15 to 16% on a global weighted basis, call it by the end of the third quarter. That's how investors can live with it going forward. But that the real threat is the new tariff regime slowing growth perhaps even more.
So they're saying tariffs are a little bit more around the concept of growth versus inflation, which is fair. Wow, S&P 524. Palantir's up 10%. We are 0.4% away from a 4% day on the S&P 500, 524.23 currently right now. Everyone's portfolios should be bright green based on what we're seeing right here. But yeah, look, I think Evercore's analysis that the pressure on growth is much more severe than inflation is fair. However, I also think, what is J. Powell going to do if the pressure on inflation is substantial? It's going to be hard for him to cut. I don't know if he's going to be able to justify it. Eventually, he will have to if growth slows down, because then he can justify it. But that is one of the balancing acts that I think is going to be really important. There you go, up 4%. There you go, 524.3 on the S&P. Just crossed 4%, slightly under that 4% level. But there it is, green 4% for the day. Netflix up 5%. Tesla up 6.6%. Palantir up 9.9%. Alibaba is up a little bit. GameStop's up a little bit. Raytheon, Lockheed Martin, they're up. Nvidia 7% on the day. This is why I didn't sell covered calls yesterday. It's just you know a stock a little bit. You see how it moves up and down. It's like you can get really burned sometimes trying to go for premium versus just letting the stock do its thing. I still think that 110, 115 range is more appropriate for calls versus 105, especially because I want to sell the calls at like 130, 135-ish. But that one, nicely green today, up 8%. Grab up 12% on the day. Apple up 5%. Robinhood up 7%. Archer's up 7.6%. MicroStrategy's up 5%. Bitcoin's still above 80,000. HIMS is up 3%. IWM's up 3%. Taiwan Semi up 4%. SoFi up 5%. Celsius up 3%. AMD up 6%. Grinders up 4% on the day. Google is up 4%. Open Doors up 4%. And then you got Palantir well over 10%, 10.3 currently right now. It's nice, dude. It's nice. It is nice. VIX under 37 as well. That's also nice to see. Again, no one knows if this is a bull trap or not. This might be. But we can still enjoy it, right? We can still enjoy a bull trap. VIX right here down 21%. Feel like you're allowed to enjoy a bull trap, right? Like you're allowed to enjoy it even if you don't believe in it. It's just like, you know, you can go get the manicure, pedicure without worrying until everything goes red again. And then you can forget you even did that. Like you can enjoy it a little bit. Getting closer to Saratoga. No, dude, if I get Saratoga, you guys are going to kill me, dude. You guys are going to be like, see, this is why the market's tanking the day I get it. So no more Saratoga. Dude, to be honest, dude, like obviously I was just joking the whole time. The water's not that special. It's just water. Like it's a the bottle is kind of cool, I guess, but like it's just a blue bottle. Like it's not really that serious. For the people that actually think the water is that amazing, I have a bridge to sell you because it's just water. So it's not really that amazing. Yeah, it's not special water. It's like branded as special water, but it's just water. Tap water is the best. Okay, tap water is not the best. Tap water. I'm not poor enough to go back to tap water, dude. I'm not poor enough to go back to tap water. That's when you know that shit's hitting the fan. If we're going back to tap water, it's like, all right, we're a little bit above that level right now. $50 haircut. Dude, I do need to get a haircut today. So I think I am going to get a haircut. It's not 50 though. It's $40, but it was, dude, it was $20 in 2020 at the end of 2020. And slowly by slowly, he kept increasing it. And then the other day he's like 40. And I'm like, all right, bro, like he's my guy. Like, you know, 40, that's fine. But if he says 50, I'm like, all right, dude, like, come on now. Like this is not like, this is being a little aggressive here. I gotta like, I just like S&P still down 7% for the year. We can't be doing that. But yeah, I think 40 is reasonable. I think 40 is not crazy given he does my beard and all that stuff too. So I don't think that's horrible. Okay, what else? What else do we have? Walt, thank you for the $10 super chat. Get a Fiji water before the tariffs hit. That's a good idea. That's today is the day we get to act rich again, enjoy the luxuries of life, and then tomorrow we get to remember why we shouldn't be enjoying the luxuries of life. But at least for today, we get a shot. Tesla right here up 7%. S&P is up 4. Palantir's up 10.15. Again, dude, it's what? It's not 10:30 yet. We got 10 minutes until the theoretical slam comes in at 10:30. But as of now, it's like, I don't know. It's holding. And you would think by now you get a little bit of a decline. Again, maybe 10:30 in 10 minutes, we actually see that downside. I think the most we've seen is like about 0.7% shaved off the S&P, but it came roaring back within like, what, 15, 20 minutes? So I don't know. I think selling calls today is not horrible either. I think that's not a horrible thing to do. I mean, on a day like this, if you don't trust it, you don't have to be super, you don't have to be super like aggressive with your covered calls. You could be conservative with them and still get a little bit of decent premium. It's just, this is why it's so hard, right? This is why I think like investors that beat the market consistently are so they're so well respected, because this is such a hard game. Like to have a hunch, to have an intuition on understanding when and where like is time to buy, when it's time to sell, when it's time to hedge. It's like, it's really hard. It's really freaking hard. And speaking about good investors, here's one of the best investors of all time. We didn't look at his take on tariffs. So Stanley Druckenmiller came back to Twitter on Sunday, and he said, I do not support tariffs exceeding 10%, which I made absolutely abundantly clear in the interview you cite. This was the clip of the interview, and this was Druckenmiller talking about tariffs above 10%. Now, what's interesting here is Bessent is a disciple of Druckenmiller, and Bessent also probably doesn't support tariffs above 10%. Like, it seems pretty obvious that Lutnick's the only guy who really cares about doing these like 70% tariffs, which means I think if Bessent's in the negotiating room, he could get these tariffs down and probably not that much above 10% if they can get real good deals from all these countries they're working with.
In a perfect world, I would not be for a 10%.
Oh, the audio on that sucks. You guys are not going to hear that. The audio on that absolutely sucks. Let me see if I can get better audio here. Yeah, here we go. Here's better audio. Yeah, even I could barely hear that audio. There's no way you guys would hear that. Okay, so here is Druckenmiller. He's actually a longer clip of him talking about tariffs. So let's listen to what he had to say. This was about a couple months ago.
When you spoke at a conference and said that you were shorting U.S. Treasuries, I think it was, you said in a perfect world, Stan, that you're not a fan of tariffs, but that it could be potentially the lesser evil if it's done in moderation.
Yeah, I don't want to exit this interview as tariff man. In a perfect world, I would not be for a 10% tariff, but we're not in a perfect world. As you know, we have a big fiscal problem. Mandatory spending plus interest expense is literally 100% of revenues right now. And both sides of the aisle have said they are not about to cut entitlements, which is the elephant in the room. Having said that, because of that, we need pay-fors. So our main choices are an income tax and a consumption tax like tariff. So when I say tariffs are the lesser of the two evils in terms of those two, because we have a fiscal problem, we need revenues. Tariffs will generate revenues. We also have a private savings problem in this country. They're far too.
One sec, guys. Let me make sure the stream is still working. Are we good? Yeah, okay, we're good. Cool.
Bells about tariffs would probably be fine with a consumption tax. To me, tariffs are simply a consumption tax that foreigners pay for some of it. Now, the risk is retaliation, but as long as we stay in the 10% range, and I think so-called fear of Donald Trump, I think the risks are overblown relative to the rewards. The rewards on high, it's more like they're the lesser of two evils.
So there's Drux on tariffs, and essentially Druk said, I support it. It's a necessarily evil, but I only support it up to 10%. And again, Bessent has not literally said the same thing, but you can kind of get the vibe of how Bessent thinks about tariffs as well, given he works so closely with Drux. Trump said, let's do 30%, 40%, 50%. I think the market is having some level of an inclination to think that it's going to go back down to 10 or 15 max across the board after they get these deals done. And those insane tariff rates they introduced at the Rose Garden were purely to play their cards and seem as crazy as possible to get other countries to be scared. And if it works, look, I'll give the Trump administration all the credit in the world if it works. But as of now, I'm a bit skeptical that it's easily going to work, and how much pain and damage is going to be done in order to get it to work, we're going to see. But I would imagine the next day or two, we're going to get an update on a lot of these deals and what that means for the administration. Tesla right here, still up 7%. S&P 500, again, new high of day, 524.67. That's up 4.02% currently right now. So it is about to be 10:30. There's no interview at 10:30. There's no speech or anything happening. It's just in general, there's an inside joke that at 10:30 you tend to get the markets that get slammed because you have algorithms that go into place, market makers, hedge funds, etc. It's not even confirmed to be true. It's just like we've seen it kind of for the past couple months at 10:30. You see a little bit of downturn. If we can get through the 10:30 downturn and don't see a slashing of stocks across the board, maybe, just maybe, today is going to be a day that actually finishes green and potentially in the right direction. Look at Grab right there, 13%, 12.9. Nice reversal from a lot of the lows we saw yesterday. Robinhood as well, trying to hit 38 currently right now. Trump's going to speak at 3 p.m. Trump's going to speak with the executive orders at 3 p.m. So I'll try to go live and stream whatever he's saying at that time, but he'll be there. He'll be there in a few hours. Let's see. China says they're not going to be bullied or shut down by Trump. Yes, so China, we talked about it in the morning. China definitely is not easily negotiating yet. Now, Trump did say that China is wanting to negotiate. They just haven't made the phone call yet. Look, I wonder, okay, who do you guys think? All right, let's say China and the USA really get to a standstill. Who's going to call first? Like, we know someone's going to make the phone call. Who's actually going to call first? I think China would call first, dude. I think at the end of the day, China knows they have to reason with Trump, and they've been through this before in 2018. Like, I think China calls first over the United States. Because I think Trump is crazy enough to just be like, no, screw you guys. We don't need any of your stuff. We're not going to import anything. And again, if you've done any research on the Chinese economy, it is not the reason they're pumping so much stimulus, which is not giving that much confidence to investors because investors haven't got that sort of bazooka style stimulus that J-Pow gave us in 2020. The reason they're doing that is because their economy is in a bad situation. Like, if the United States stops importing stuff from China, I can't imagine the economic calamities that would happen in the region. But also, we need a lot of their stuff. So it's like, obviously, there's a mutually beneficial relationship here, and both sides probably want to get to a deal. But I think China would call first. I think you should call him it. Dude, if I was negotiating with Xi Jinping, that would be fun. That would be fun, dude. If I got to negotiate with the CCP, I mean, I would just be making jokes, bro, the whole time. Literally just be making, they'll get tired of me, bro. They'd be like, get this guy out of here, bro. What is he saying? All right, here's an update on some of the tariff stuff. Let me pull it up right here, and then we'll keep going.
The Tesla is just an assembly.
Davers has some more color from the White House on this brewing rivalry. Amen.
Yeah, Sarah, that's right. This is a behind-the-scenes rivalry that's now exploding into public view between Elon Musk and Peter Navarro, two very different wings of the Trump administration internally. I do now have a reaction to all this from Caroline Leavitt, the White House press secretary. I just spoke to her a couple of moments ago. Her reaction to the statement from Elon Musk calling Peter Navarro truly a moron and dumber than a sack of bricks is whatever. We are the most transparent administration in history, expressing our disagreements in public.
Okay. First of all, did anyone not just like smile when the CNBC guy repeated that Elon said he's dumber than a sack of bricks? Like, that to me is hilarious. Number two, you got to give it to the White House press secretary. She has a good way of just spinning every situation. Look what her response is. Whatever. We are the most transparent administration in the history, expressing our disagreements in public. I mean, A+ on spinning that to, hey, we're having a productive and healthy discourse in public, even if Elon's calling one of the senior advisors dumber than a sack of bricks. I mean, you got to give it to the spin. It's a hell of a spin.
So clearly the attitude from the president and from the White House more broadly is, sort of a boys will be boys attitude here that you get from that particular statement from Caroline Leavitt, that these two people disagree. They're disagreeing in public, and the president is getting a range of views in terms of all the inputs as he considers where to go with this trade war, guys.
Yeah, I mean, look, to David's point, like Navarro took a shot at Musk on the air in response to a shot, I think, that was taken at him. One of them is a CEO that operates a business that does a lot of business in China and around the world. And the other is a hawk on trade. So right. I think it represents, how a lot of CEOs are feeling what Musk is channeling.
And the question is, from Trump's perspective, is which of these two people does Donald Trump trust more? Is going to be a longer-term player in the Trump orbit, has been a longer-term player in the Trump orbit. And I would just point out to you that Peter Navarro literally went to jail last year to politically protect Donald Trump. Elon Musk hasn't done that. Elon Musk has been here for a couple.
I didn't know that. The dude went to jail to protect Trump. To be honest, I'm really finding out about who Peter Navarro is over the past couple of weeks talking about tariffs. I really didn't. I've heard his name before, but I didn't really know his story. I didn't know that. Interesting. All right. So it makes a lot more sense now why Navarro is so supportive of the tariffs.
Couple of months. He's been very close to the president over those couple of months. But the Navarro relationship with Trump is longer standing and more deeply loyal than the Elon Musk relationship with Trump is, even though the Elon Musk relationship has been so dramatically public over the past couple of months. And we've seen all these pictures of Elon and the president together. That is a relatively new relationship. So if you're Donald Trump, who do you listen to more intently there? Is it Musk or is it Navarro? Of course, Trump has enormous respect for Musk, his history of building companies, and his wealth as well.
And his wealth and the money that has obviously been contributed to both support his campaign and other Republicans around the country as well.
Yes.
Eamon, everybody I have spoken to, again, close to Musk, indicates that when you see the two together, you really, not many get to fly on the helicopter to Air Force One, but Musk does. I don't know if you've heard the same, but they, because you're always looking for that. I've been asking, well, aren't they going to at some point end up fighting with each other? And the answer has been uniformly no, not if you see them together. So I'd be very curious as well. Eamon's point is a good one in terms of if there is somebody to side with, which way do you go here?
But it all is.
All right, so that's the update from the White House's perspective on Navarro and Elon. Are we dumping? We are holding on the 1030 slam. We are not really dumping. Instead of 4%, we're up 3.8%. I mean, I'll take that any day. Tesla, instead of 250, it's at 249.5. It looks like there is some momentum here. Now, obviously, when Trump speaks at 3, he can say anything, and this could change immediately. And again, I still am not sure why some of these Chinese-related tariff vulnerable stocks are up outside of the fact that the market doesn't believe that the tariffs are going to go into effect. But we're pretty damn green. Meta right there at 538. It's just, it's also hard to buy into this as well, even though we are seeing people buy into it, because we saw Meta go from 570 to 540 and then 540 to 470 so quickly, it was here one day, gone the next hour. And so I think people are definitely feeling a little scarred of knowing that they could buy into Meta at 530 at a 21 times forward price to earnings, and they think, hey, that's a good deal, and then just get whipsawed to the downside another 5 or 10%. And I think that's also part of the fear that might be causing some people to stay on the sidelines. 3 p.m. Eastern. Yes, 3 p.m. Eastern. 3 p.m. Eastern. He'll be talking, and I'll be covering it live as well. You think they're just dipping the market and doing bond auctions in the valleys? Well, there is a 3-year and a 10-year bond auction today, which kind of explains why the 10 years up right now. I mean, 4.237. Everyone's going to want to get the best deal they can get on. It's a 3-year note auction. That's going to be happening at 12 p.m. And then we have a Fed speech at 1 p.m., all that Eastern. So we might see some level of movement there. But yeah, I mean, theoretically, you could be seeing a little bit of this market momentum before we have those bond auctions as well. Where's the poll at? What did you guys say? Right now on the poll, if this is a bull trap or not, we are at 66% still saying yes. So basically 65-35. It's a bull trap. You know, got to give some credit to Steve. Steve, I mean, I don't know if this is going to play out, but Steve really feels like we bottomed Sunday night. Now, I'm still skeptical of that, but I mean, so far it's working out to look like that has happened. At least I know it's only been a day, but if the bottom really was Sunday night at 480, it's just every time I think of that being the bottom, the only thing I can go to is, okay, the tariffs are not going to be in place the way that Trump said they were going to be in place. Then I can easily come to a conclusion of, all right, it's not going to be as bad. Markets can rally. But if I go back to, no, Trump is crazy, he's going to actually implement this stuff, then I just can't think that Sunday was the bottom. Like, it's hard to imagine we implement those wide scale tariffs and everything's okay. Like, it's not going to be okay. Like, it's just like it's at some level, these companies will have to feel the impacts of this. This will hurt earnings growth, and the multiple that we're paying is going to be too high. So it really is contingent on this one thing, which is, will the tariffs be in effect the way that Trump says they will be? And I think that's going to determine most of what happens today. Earnings guidance will be telling. I agree. And again, Q1 is going to be good. Like, I don't think earnings are going to be bad for any of these companies, especially the tech companies. But the guidance or lack of guidance, I think, is also going to be really interesting. Wow, Chamath just did the Flagrant podcast. Holy crap. Do you guys know the Flagrant podcast with Andrew Schultz? Chamath, they have Chamath on as a guest today. Huh. He is really trying to get his tariff stuff out there. They spent an hour and 30 minutes literally talking about tariffs. My goodness. Okay, well, I'm not going to listen to the whole thing, but I skipped to one of these chapters, which is if he owns any public stocks and if he thinks a recession is going to come. Let's see if he has any thoughts there.
What about stocks? I mean, if you're asking me honestly, I'll give you the honest answer. I do not own a single public stock and have not since the end of 2023.
Wow. So we can tell he's still pretty bearish about the economy right now.
Since the end of 2023.
Will you buy in? Do you see this as an opportune time?
No.
Wow. Oh shit. So now we're getting somewhere good. So
does that include like ETFs, funds, like things?
I don't own a single. I have zero exposure to the
so are you not bullish on
equity markets.
Are you not bullish on the equity market?
I am very bullish private equity business, meaning like, private companies. I have enormous exposure. But my point is, the stock market for me is not where I quote unquote make money or create value.
Is that a function of a lack of confidence in it, or just you want to put your time?
It is so funny hearing him say the stock market is not where I create value. When in 2021, he created a lot of value for 2 minutes with the SPACs, and then that value kind of disappeared. But it's very funny to see the switcheroo from 2021, he's the stock market SPAC king, to, I don't have anything in the stock market. I don't care about the stock market anymore.
energy towards the private
loving
sector.
adventure.
It's 80% the latter, 90% the latter, and the 10% of it where I probably should have some exposure, I've just chosen not to.
Got it. Okay.
You mentioned recession. Do you think we're headed towards one?
I thought that we were sneakily in one for a while. So this is the other thing that is important. We have a very brittle way of reporting data. Our perception of where we are is constantly changing. So every Friday, the first Friday of every month, the financial markets get this thing called non-farm payrolls, which means tell me all the jobs that were created in America everywhere except on a farm. And they use it to judge how healthy the economy is. That number has been basically unreliable for years. It'll come out with a number, then it gets revised the next month, then it gets revised. It's the same with GDP. So what is GDP? It's just economic activity, the total sum of economic activity in America. What is that number? That's constantly being revised. So when I saw that, I was like, wow, this is like really weird. Why are these numbers so fragile? And it turns out the way that we measure this stuff is very bad. Now, one consequence is that there is an emerging realization that a bunch of GDP was just the government spending a ton of cash in the economy, hiring people, contracts, this and that. And it's not that those things are bad, but they could be, a lot of waste there, right? Like what, you and I do for $1 sometimes, you've seen these funny articles like the $700 waste paper bin and like the $900 umbrellas. How does the government end up buying these things? I don't know exactly, but all of that artificially props up the economy. If you take that out and reset it to a more normal level, there is a belief that we were actually sneakily in a low-key recession like a year ago or, 2 quarters ago. I think that there's a reasonable chance that those people could be right.
Is there a
Interesting. So you got Mr. Chamath admitting he owns zero exposure to the public markets, which again, I just find it so ironic because in 2021, part of the reason that people know Chamath, how do you know Chamath, right? For anyone in the chat, how do you know Chamath? It's not because he was number whatever employee at Facebook, because no one really cares about the first couple thousand employees at Facebook, right? It's because of the SPACs. Has Chamath built a company that I don't know about that's like super, super big? And I don't know about that. I remember seeing him for the first time on CNBC in 2021, pumping SoFi. That is my first understanding. Or Clover. That was a big one. Dude, the Clover cult could have become a GameStop cult, but it just didn't have enough momentum. But oh my, they were a cult. They were a cult. So my point is, it is hilarious to me. This is the disingenuous nature of the guy, right? And I don't hate the guy or anything like that, but the way he talks on Twitter is so pretentious and obnoxious, and he's so rich and so wealthy. And when you have that level of wealth in life and you're that obnoxious, to me, it says something about character. And the fact that he's never really apologized for the SPAC mess, even though he's admitted that he made massive mistakes, aka lost a lot of retail investors their money. And the counter argument is, oh, well, when you buy a stock, it's your own decision, yada. It's like, yes, of course, everyone, if you bought Clover and you lost money on it, it's your own decision. You can't blame Chamath for that. But at the end of the day, if you're the guy saying, hey, this is going to be the next big healthcare thing, and there's no way you sleep well at night not knowing there's a little bit of impetus on you as an individual. And now 3 years later, he's out of the public markets completely. It's just like, yeah, I made tons of management fees on pumping these SPACs and now I'm gone. Now I just don't trust equities or trust in American innovation in the public markets at all. It's one of those things where obviously it's telling about what's happening. But the core part of his argument is that government spending propped up the markets over the past couple of years, right? And I think a lot of you would agree with that. I think the more research I've done, I've realized, yeah, government spending definitely did help support not only equity valuations, but the overall narrative that the economy was good. I don't think pulling back government spending is going to cause some massive recession. Obviously, it'll cause some pain. That's inevitable if you cut back spending. But to not have any exposure to equities simply because you think that the non-farm payroll numbers were hyped up a little bit. And does he believe that they're juiced up now? Because these are Trump's non-farm payrolls. Everyone was saying, oh, Biden's cooking the numbers. Is Trump cooking the numbers? Because you got to be consistent there, right? Are the 228,000 jobs we added fake last month? Did Trump tell the BLS to put in the wrong numbers, right? So If those are real jobs, then I don't necessarily know if that argument has the best weighting. But also, I also don't think it necessarily makes sense to get completely out of the markets just because the government's not spending as much. That's not to say that certain stocks aren't overvalued and stuff. I'm just saying, like, to go from 2021, public markets are the greatest vehicle for wealth creation, here's all these SPACs, to, yep, I'm totally out of the markets. It is a bit weird. He knows how badly rigged the market is. See, like, I understand that perspective. I'm like sympathetic to it. Like, yeah, the quote unquote the market's rigged. But at the end of the day, I also think earnings growth has been phenomenal the past few years. It has blown away every expectation. And I think we can't forget, at the end of 2022, every analyst was bearish except realistically Tom Lee and Dan Ives. And now at the end of 2024, every analyst was bullish, right? So maybe that means that it's going to be a bear market this year. But the point is, 23 and 24 really did deliver the earnings growth that the market wasn't expecting, which, like, I remember NVIDIA, May of 2023, when those numbers came out and it went from, I think, 260 to like 410 overnight. And the market realized, oh, like, it's happening. It's something that I don't think necessarily we can deny, you know, even if there are parts of the market that are potentially rigged. I'll put the link to the video in the chat if anyone wants to watch the podcast. You guys can watch it right here. Jake, thank you for the $5 super chat. He says, just lost absolutely all respect for him. That was nothing but fear mongering. And just a few years ago, he's bragging about never selling Tesla. Yeah. And see, here's the thing. I've said this many times, many times. And I still believe in this. Chris says, send him a StreamYard. All right, Chris, I'll send you the StreamYard. I believe in finance and in finance media, or if you're a public personality that talks about the markets, technology, whatever, the biggest thing you can have is your consistency. Because what is the point of, like, being a financial commentator? It's like, how consistent is your narrative around the stock, around the macro, whatever, and how can you relay that narrative and communicate it in a way that's meaningful for people to consume? That doesn't mean you can't switch your thesis or switch your take. Obviously, if a company has a horrible earnings, you can kind of switch the way you think about it. But to fundamentally do a 180 completely and go from I'm never selling Tesla to the entire United stock market is rigged, that's what pisses people off. That's what really pisses people off. Because then they just don't know if they can trust you. They don't know if you're even worth listening to, because you know, one thing you say today is gone tomorrow. So I think to go from SPAC king to I'm done with the public markets, it's just wild, bro. Like, that means you knew in 2021 the public markets were also a scam. If markets are rigged right now, what do we think was happening in a ZERP era in 2021? Right? Like, I mean, we talk about rigged now. I would imagine it was not as friendly back then, but obviously he took advantage of it. So I think it's one of those things that people just don't tend to respect that much. Venture Global right here up 19%. So we're getting a little bit of a 1030 slam, guys. S&P is not up 4%. It's up 3.2. I mean, I'll take that slam. That's not too bad. All these stocks going down just about 0.5 to 0.75%. NVIDIA goes from 7 to 6, still at 104. Grab was up 13%. Now it's up 12%. Like, it's not really a slam, but yes, it is a little bit of a decline across the board. And then when Trump speaks, we will get more details at 10:30. All right, let's bring on one of our favorite analysts onto the show, get his thoughts about this reversal and if he thinks it's a bear trap or a bull trap or not. Chris, good morning.
What up? What up? What up?
We got Chris with the video today, huh?
Yeah. I saw you were bashing Chamath, so I couldn't help it. I was like, bro, I gotta get in on this. I gotta get in on this ASAP.
So what is your take? He goes from SPAC king to markets rigged, and I have zero exposure to the public markets.
That's who he is, man. That's really who he is. He's just, you know, there's a lot of people that get called grifters, you know, and he literally is the definition of a grifter, dude. Can you believe it? Like, he not only did this whole SPAC thing, you know, like really take the markets in a frenzied direction, he was actively pushing it, you know? So it is what it is. But I do still look at his views and try to get some value from it, but I wouldn't trust anything that comes out of his mouth. anything.
Yeah, he's a smart. He's not like he's a stupid guy. He's a smart person. It's just there's that level of energy that's very grifty, right?
Yeah. I mean, I don't know, man. Chamath is Indian. He's not Indian. He's Sri Lankan. Okay, get that right. We're not claiming responsibility for Chamath. He's a 6 foot tall Sri Lankan, which is like unheard of if you think about it. I've never met a tall Sri Lankan. Okay. I mean, I haven't met very many Sri Lankans, so I can't really say that's a really big
I think
thing.
I told you my uncle used to trade in 2021, and he bought Clover and all these stupid SPACs because Chamath, he thought he was Indian. He's Indian. So he sees an Indian guy saying, hey, buy Clover. He started buying a shit ton of Clover. And then obviously, went to shit.
Yeah.
Kris, what's your opinion on the markets, dude? We're rebounding. Do you trust it? Do you think it's a bull trap? What do you think right now?
I don't care anymore, to be honest. Like no. Let me explain my reasoning. I'm officially not trying to mess around and do any sort of short-term stuff until probably we get a lot more clarity. I'm just not dealing with it anymore, because the thing is, like, trying to figure out what the market is going to do based on policy, and policy can get flipped on like any, like literally by the minute now. It can get flipped.
Real quick, here's an update right here. U.S. Trade Representative says, we spoke to 50 countries. Many said they won't retaliate. Some have already lowered their tariffs, but I see a distinct difference between China and other countries that are willing to negotiate. China has not indicated that it wants to work together.
Yeah, I mean, look, I don't know how this is going to impact all this stuff, but I am not trying to do any sort of swing trading, any sort of buy this. No, just find good companies, buy them, and just don't look. And don't do options right now. I'm not doing any more options, at least until I get 100% firm grasp of everything. Instead, it's just buy the stock, hold the stock, and that's it. You cannot do any sort of strategy right now, because if you try to figure out a strategy like, oh, I think this company is overvalued in this time frame or undervalued in this time frame, none of that is going to work. Valuation, like, believe it or not, fundamental analysis is what you should be leaning heavily into rather than technical analysis. For the last probably like year before, we could at least somewhat technically find opportunities, but I don't think that that's the case anymore. I think we're just going to have to rely on fundamentals and take a very, very long-term view on things. So basically, you have to find
you know what's funny? Jason, I was talking to him over the weekend, and we're going to have Technical Tuesday today. He thinks technical analysis is more important than ever in a downturn like this.
I'll disagree with that, because the thing is, if you think something is oversold and then Trump comes out and says, hey, I think we should tariff blah, 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 the market and the entire market goes down 10%, what good was your technical analysis?
Yeah, that's the pushback I gave to him, but he had a lot of pushback to my pushback. So tonight we'll talk about it. But he's a firm believer that right now is when you lean into TA. But I agree. Like, if you buy Meta at 530 because you think it's a good deal and it goes to 480, like what does it mean in this environment, right?
Yeah, well, to me, when I look at this, I am going to go back and just look at earnings, right? And then base my investing decisions based on earnings on both the sector level and also the company level. And just that's where I'm going to do the deep dives and basically buy the stock, hold it, ride out the volatility. Don't try to do options on something like this where you try to be tactical and cute. There might be opportunities if you do want to be a little bit strategic, and you could sell really, really far out of the money calls on some things to just generate income while volatility is high, because there is, you can make that work. But I've never been one to really do that effectively, so I'm not going to try. Instead, just going to focus on finding great businesses that have 5-year out time horizons where I can see exceptional returns 5 years out and just buy those and hold those. And what's good is that with the market downturn right now, I think there's a lot of companies that are in that zone right now, that they've gotten really oversold. And if you just look 5 years out, you can actually see that this thing has a potential to be 5 to 10x from where it is today. So,
okay, so I want you to give me two worlds. The first world is Sunday night futures were the bottom. The second world is we are going to make a new low past the Sunday night futures. Describe to me.
I have no idea. You're asking the wrong person. I just told you that nothing is bottom, nothing is top. That is the environment.
It's fair, but I think you would agree if the tariffs don't go into place, there's a good shot.
No, because it could be something else. It could be us starting a war with Iran. It could be us, like Taiwan getting invaded by China. Please tell me how you're going to put that into your technical.
Yeah, but those are really extreme scenarios. I mean, a war with Iran.
No. See, here's the thing. Under any other circumstances with any other president, yeah, it's definitely extreme. But under this president, it's more possible. It's more possible than ever before.
It's more possible, but realistically, like those are cherry pick scenarios that are not going to play. I think if we get through I agree with you. If we get through the tariffs, there'll be something else. I don't think it's war with Iran.
Brother, I'm telling you, this is policy by tweet. Anything could happen at any time. All right. Like literally, you can wake up one morning and literally the entire world has changed around you. And the thing is, usually you want people in power who are basically very, very neutral. They're trying to agree on things. No, the Trump administration is different, bro. They're a different breed of people, So like all of this stuff right now, look at this. He's like, I'll do a long-term purchase of LNG, right? And then one day Korea is like, oh, you know what? They do way too much shipping. We need to bring shipping back. I'm going to terminate all the deals with South Korea unless they stop shipping.
But do you think this screenshot right here, this is what he tweeted in the morning, is productive? Because they're essentially saying that South Korea, which has a surplus with us, is willing to get more to neutral with trade, which is good.
Bro, he can make a deal today and 2 weeks from now, take that shit back. He's the one that put USMCA into place and then took USMCA out. What does that tell you?
I get it. I feel your overarching argument. I'm just saying if the tariffs really were this crazy chase to negotiate and it ends up working, I mean, I'm going to give him credit. I feel like everyone should give anyone credit.
But from a risks management standpoint, this is what I'm saying, that right now is not a good time to be tactical. Like, oh, I think this is the bottom and I'm going to buy options on this company because I think it's the bottom. Like, no, you're making a mistake, especially because time is not on your side when it comes to options. At least with a stock, yeah, you'll have some momentary weaknesses, but your company won't go bankrupt if you pick the good ones, and that's, to me, I find it that it's actually very easy to pick companies that won't go bankrupt. But you can do that. Yeah,
I agree on the option.
The challenge here is that if you're trying to determine a price target on a particular stock, let's say 6 months from now, a year from now, you don't know what the end valuation on the market is going to be, right? Before, we could at least look back and say, well, you know what? I think Google is undervalued because it's trading under 18 PE, right? Which is reasonable. But then you don't know what the entire market's going to be a year from now, what kind of valuation you're going to get, because the people in charge of policy are very adamant on moving things up and down, up and down. So like I said, for me, when I look at this market, though, the thing that I'm not going to do, and the people I'm on the chat, I'm just going to be honest, I'm not trying to do any more time-based approaches to this market because I have no clue what the hell is going to happen. Instead,
AKA no more options is what you're saying.
No more options, just focusing on plain old, plain Jane, just buy stocks and hold stocks. That's it,
Look, I think that's fair. Did you buy anything yesterday or today?
Venture Global. I've just been buying a ton of Venture Global. That's it. Because I'm looking at Venture Global 5 years from now. So I'm looking at it and I'm like, well, they'll have this many plants up. They'll be generating this much cash flow. And then based on that, they should be, they should be valued like this 5 years from now, regardless of what the Trump administration does. The business is a solid business. They do have some exposure to natural gas up and down. But for me, I'm bullish on future demand of natural gas and electricity. So I'm like, okay, directionally, this company is the way that I want to go. And it may go down to $2. I don't know. But I also know that it has a potential to go to 100. So I'd rather just buy it and chill and not do anything. It's cash flowing business.
You have to go to 25, right?
Yeah. It's a cash flowing business. They generate profits. They have opportunities to buy back shares with excess cash flow, which they mentioned on their last earnings. So all those kinds of things are what I'm looking for in companies right now. I'm not necessarily trying to find like a bottom because it's technically oversold or whatever. Like I think cruise lines are going to do really well over a long time, so that's where I'm at with this.
Okay, so what happens if they announce a bunch of deals and markets go up another 4 or 5% from here? I mean, like emotionally, are you
Doesn't
just
matter. Doesn't matter. I'll root for anyone who's got like excess long positions, but for me, I'm just happy being in the market with a neutral outlook on things. I know the markets are eventually going to go up and to the right, but the one thing I'm not going to do is try to time the up and to the right. Does that make sense?
Yeah, I mean, of course that makes sense. It's just a question of, so here's a little bit of pushback. If you think Trump will have some war with Iran or something, why be in stocks if like he can do anything crazy? Like,
Because
why
there's
be
not
in the
much you could do, because eventually the war will end.
Yeah, but if we have a war with Iran, like this is my point is like you have to be bullish still in the midst of all this volatility.
Oh, I'm bullish. I'm bullish. I'm bullish long term. That's the difference. I'm not bullish short term or medium term.
Yeah.
I don't know what's going to happen short and medium term. So that's what it is.
That's fair. That is fair. Are you buying the dip on Palantir?
Nope. I told you not until it gets to a zone where I think I feel comfortable owning.
What price realistically would you buy Palantir?
I don't know, man. It's gonna be a while. Probably like below 30s.
Okay, see, that's disrespectful. See, you could have said 40, 45, 50. I get it, but
nah, I'll stick to $30, bro. Under 30, I'll take it. Yeah, I just feel like right now this market is just very hard to predict anything that's gonna happen. So it's best to just not deal with the volatility. I do, however, think that it's in Trump's best interest to basically make the markets go up next year. So, but then again, I don't know the
wait, but hold on. Can we talk about this? This whole freaking tenure is not going according to plan. Like a lot of this just doesn't make sense anymore to me.
That's what I'm trying to tell you. I don't know.
They had this where they wanted on Sunday night, and they can't keep it down there.
Once again, nobody knows, brother. Nobody knows. Because the thing is, it's this back and forth gyrating. One day we're going to put tariffs on Mexico. One day we're going to do it on Canada. Then we're going to take it off Canada. Then we're going to how do you invest like that? How do you think about it as a business leader who's got factories in Mexico, Canada, Vietnam, China, whatever, right? And you're having to basically deal with this. I mean, it's
so I agree, but like if all of this works and he gets a bunch of deals and there's not anybody, like you would have to admit it was a lot of short-term pain for a long-term new economic paradigm, right? If it actually works. It's a big if, but
once again, you don't know. Like at that point, what you're doing is you're flipping a coin and saying, oh, you know what? I'm gonna determine where the markets go based on that coin flip.
No, but I'm saying, would you give him credit if he actually pulls it off and the S&P's back to like, I don't know, 6,000 and like we got all these deals done?
Sure, why not?
Look, I've been critical as well, but like I'm not Democrat, Republican. I'm not ideological. Like if it works, it fucking works. I don't care, right?
No, I agree with you. If it works, it works. The thing is, you're challenging a lot of conventional theory here around like just plain economics. And I think we're seeing that kind of play out right now. Did you see the thing with Peter Navarro and Trump?
Yes.
I mean, not Trump and Elon.
Yes.
I mean, the research that I've done is basically Trump is hardcore tariff man. And the thing is, Peter Navarro, he found Peter Navarro. Basically, Jared Kushner recruited him because he's like one of the only economists that's supportive of tariffs. Because most economists, I would say probably like, I don't even know how many, but pretty much everyone is like, yo, tariffs are a stupid idea.
Mm.
No,
you are right about that.
Retardo.
Dude, Druckenmiller's not a fan of it either. And you're right. Bessent and Druckenmiller are very close. So this idea of 10% tariffs probably was introduced by Bessent based on his learnings from Drux, but they obviously went the wrong way.
No. I think to a very limited degree, tariffs could be used as a way to negotiate fair trade practices. But dude, I don't think Bessent was like, hey, we should do 30% on Vietnam arbitrarily based on like whatever figures. That's purely like a Peter Navarro thing. And I think the Peter Navarros of the world are in charge right now in the Trump administration. And you know what? Trump may be crazy enough to put Peter's thoughts above everyone else's, and maybe he's going with it. But I think Elon and some of the other mega donors among the Republican Party are definitely going to be leaning on Trump to kind of ease this whole tariff thing. But if Trump believes in tariffs and that's the way that things are going to go, then Trump will do everything in his power to keep at it. And like I said, I don't know how long Congress is going to be able to basically allow Trump to be Trump.
Yeah.
Because even they know that under current policies, if the average person gets wiped out, and in my opinion, the average consumer is going to deal with the pain, not the wealthy elites. Everyone else is going to be fine. Like, it's going to be the average person where they're going to have to pay twice as much for the same product that they were buying last year. Inflation doesn't hurt the wealthy nearly as much as it hurts the average person, so.
All right, last question for you, and then we'll end out the show. Do you know what a Hoover is?
Like the vacuum cleaner?
Damn it. How does everyone know this shit except me?
Because you're from a different time, bro.
I didn't know what a Hoover was, but everyone was like, how do you not know?
You're from a different time, bro. You're from like this new generation. Like, do you know what Betamax is?
It's a brand.
See? Doesn't know what Betamax is.
Do you know what Betamax, bro?
Do you know what VHS is?
No, okay. I know what a VHS is, all right? I had freaking, what do you call those? What do you call the thing?
Right, but you've never heard of Betamax. Betamax, right?
No, I never heard of Betamax. What the hell's
Betamax? Betamax was a competitor to VHS.
Oh, wow.
Yeah.
I definitely know what VHS is. I never knew Betamax was a competitor.
Yeah.
Look at that. Wow.
Yeah. See, I grew up in a time where things were different, man. Did you ever have what is that thing called? A MP3 player, but it was like on a diskette. I forgot.
Yes, it's a mini player almost.
Yeah. Okay, at least you're not that young.
Yeah.
Yeah.
But I didn't know what a Hoover is. So
yeah, a Hoover is just a vacuum. But yeah, just for clarification, I think this current market environment, there's just so many things moving around. I am optimistic that maybe the Bessent camp eventually wins out. But dude, I really think that the Trump admin has to get rid of Peter Navarro, man. That dude, well, you know what? I'll take it back. I think Trump put Peter Navarro there. So there's no way that he's going to get rid of Peter Navarro right away. I think eventually Peter Navarro might be the fall guy. I mean, the other thing is Lutnick. Everyone hates Lutnick. Everyone fucking hates him, dude.
Yeah, people are getting tired of him. That's for sure.
Yeah. So we'll see what happens. But
yeah.
you
think there is if this all fails, you think there's a fall guy and it's not Trump?
Yeah. I mean, that's how it's always been, right? Trump is never going to take. I mean, yeah. Did you watch the movie The Apprentice?
That's a movie? I thought it was a show.
No, it's a movie that just came out about Trump.
Oh, no.
So basically it outlines Trump's relationship with this guy, Roy Cohn. And Roy Cohn had like some basic principles that Trump traditionally follows in all of his dealings with things. And one of the principles that's in there, and it makes a little bit of sense, says never admit that you were wrong, or never admit that like, think about it this way. Did you think Trump has ever admitted like, hey, I think Trump Steaks was a bad idea, or Trump University was not a good move, or I shouldn't have bought the Taj Mahal in Atlantic City? Like, he'll never admit that. He's like, oh no, it just never happened in his brain.
I go the opposite. I admit I'm wrong every day.
Yeah, but that's because you're you have self-realization. So
yeah,
it is what it is. But the point is, at this point, I would probably, as an investor, take a lot less risk in terms of options. Well, the options, you're getting the most amount of risk, especially because you're dealing with time. With stocks, you don't have to deal with that. With stocks, you just buy good companies, buy them and hold them for long term, and you'll be fine. And especially in today's the one good thing is that because of all this market uncertainty, you're actually getting good deals on companies rather than buying them at expensive prices and hoping that they get more expensive.
Yeah. Okay, so actual last question for you, then we'll end it out. Give me a percentage chance that this whole thing works and markets recover. I know you're not sure, but what is your gut feeling, or that it fails? Like, is it a coin flip, or is it 60-40, 70-30?
Dude, this is economic theory. I don't know. We've never been in a position where we've applied tariffs like this outside of Smoot-Hawley, and Smoot-Hawley didn't work out really well.
Yeah.
So the question is, what is actually going to happen? And no one knows. We're in a completely new paradigm. So when that happens, what do you do as an investor?
You stay on the side.
Which is take less risk.
No.
You just tone your risk down. Like, if you have some certainty, you turn your risk up. If you have uncertainty, you turn your risk down. That's it.
I think that's fair. I think it's fair. I would say it's 50-50. I think there's a 50% chance all of this can blow up and fail, and Trump has to reverse everything. I also think there's a 50% chance they get a bunch of deals and China comes to the table and maybe it works. So I guess we'll find out.
Exactly. I'm telling you, we're at a point where it's literally anything can happen at any time. And the worst
Speaking
thing
of that, markets are dumping right now. Kind of.
And based on what? Did some kind of tweet go off and basically create a firestorm?
No, nothing. But it makes sense, right? Trump's going to speak at 3 p.m. Market's probably scared of what he's going to say. We already got up 4% on the day. That's an unusual move. You tend to get a retracement. I mean, like, it is just hard trading this market other than DCAing and, as you said, not looking at it and just buying good quality companies. That is kind of the
point. Then like right now, you've got tariffs that are going, like the 100% tariffs are going to be in China starting tonight at midnight.
I believe so.
They could be rolled back. They could be kept on. They could be turned into 200% before if the Chinese are like, screw you, we're going to raise 50. And so Trump says, no, we're going to do 200. What do you do then?
This quote could be causing it. One of the U.S. representatives saying Trump has been clear that he won't do tariff exemptions in the near term.
I'm telling you, this is literally Donald Trump applying his economic theory and finding people that believe in his economic theory and basically selling into that. And he's basically gambling the economy. That's it. I think he's gambling the economy. So what can we do as market participants? Just, understand that we're in a risky environment with no certain outcomes. Valuations don't matter because markets can completely go irrational in either direction, bullish or bearish, So when it comes to uncertainty, market does not like uncertainty. And so things will get sold off. So I feel happier knowing that I have this mentality this year than what I did last year, which was be a little bit more heavy in options and trying to. And the thing is, I did well last year in options. So I got a little bit too cocky early on. And so, I paid a little bit of price for that. But, I'm good enough to know when to basically manage risk down. And right now, I'd say manage risk down is probably a good idea. Don't abandon the market. Don't sell everything. Stay in cash like Chamath, because that's ultimately that dude is probably still in public markets. He's just always going to be. He's like Trump. He's like he'll never admit that he was wrong.
Yeah.
Like he could very easily say, "Sorry, I led you guys into the Virgin Galactic death trap," but he didn't do that.
I forgot about that one, dude. There were so many. I forgot about that one.
Yeah, I mean, it's just, it is what it is. For me right now, I think
lack of humility about this. Like at the end of the day, people can make mistakes or whatever, but the fact that he doesn't acknowledge like that was an issue or that or has ever publicly apologized, that to me is what pisses a lot of people off.
I mean, what's sad is that he actually thinks that, hey, I didn't tell you guys not to sell. That's the type of douchebag that he is. That's the part that I hate about him the most.
Yeah.
Because he sold out. But then when his, with everything else, he's like, oh, everyone could have sold. You didn't need to keep it.
Yeah. It's like it's technically right, but the way it feels in the real world is you're just a piece of shit, And that's
pretty much. Yeah, man. So let's live a little bit risk off this year. Find great companies, buy them, chill, and relax, and basically let Trump do the Trump thing. And maybe one day we'll get the Trump pivot and the markets will rise up again. I don't see it in the near term at all. I think the more uncertainty, I think he's trying to really breed a lot of uncertainty into the markets, so that this way he can come off like a savior later on. And the Republicans are going to have to make a choice. How long are they going to go with this until they put a stop to it and say, you know what? No, I think this tariff idea is a bad idea, and we're going to legislate away your powers, to take this, this tariff threat out of the markets. Because I mean, look, if you know anything about Econ 101, you know that trade deficits are not a bad thing. Okay, they're actually a capital surplus. But
right.
Let's not go into like the minutia of it. But the point is, are people's lives better after free trade or worse? Look at all the great things we have. Like, yeah, I mean, sometimes people will be like pissed off in proportion. Like, how come that guy has a Mercedes and I only have a Toyota? Like, I feel like the economy is unfair to me. Like, bro, be happy. You have a car. Like, you're not riding around on a horse and buggy.
Yeah.
Some people would rather us go back to the days of riding a horse and buggy again because it would give more jobs. Like, that do you ever heard of a term, the Luddite? Do you know what Luddites are?
Yeah. Yep.
Yeah. There's so many Luddites out there in the world that it's crazy to see. Like, because they feel like they are getting shortchanged, they would rather blow up the entire system.
Yeah. I think the next 24 hours are going to be really interesting, dude. Like, either we get some deals.
24 hours this year has not been interesting.
That's true. That's a good point. Dude, we really thought this was going to be bull markets, Trump deregulate everything, and it's just completely the opposite.
Yeah.
Completely.
Yeah. We didn't have free trade before U.S. tariffs. What does that mean? I don't even know what that they're trying to say.
All right. I think that's it for today.
Later,
Kris,
brother.
Appreciate you. Chris's Twitter right there in the chat. Kris, we'll talk later as well.
Have a good one, brother.
Have a good one. All right, guys. Cool stuff. I think that's it for today. I think I'll be live early if Trump does his executive order stuff. It might be at 3:30. It might be at 3:20. So maybe second day in a row of an early market close. I didn't even know he was speaking yesterday, but then I saw he was speaking, and so I just went live. But yeah, we'll probably be live today, and we'll see if this green can last. I mean, so far, again, obviously, we're seeing there's a red candle right there from 4% to 2.5%. So you're seeing S&P from 525 to 515. That's probably going to be scaring a lot of people right now. This is when it probably should be happening around lunchtime, and we'll see it around 3 p.m. if it re-picks up momentum. Tesla's up 4%. Everything is still pretty damn green, even if it's not green as much as it was, which I don't think anyone can complain about. But by the end of the day, when we get these executive orders, whatever they are, and potentially deals announced, if any are announced, then we'll see how the markets are performing from there. Word of the day. What is our word of the day? Okay, I've never heard of this word. I don't know if you guys have heard of this word, but here is the word. Octenary.
Octenary.
Pertaining to the number 8. They realized the radio transmission used an octenary code. The orchestra's brass section was arranged in an octenary formation with 8 musicians in 2 rows. Well, today is April 8th, so I guess the word kind of makes sense here. Hopefully we get more than 8 deals today. Bessent says we got 70 countries willing to negotiate. So I guess towards the end of the day, we're going to see how this plays out. Hoover's the real word of the day, though. Hoover's the real word of the day. I can't believe I didn't know what a Hoover is, dude. Did you guys know what a Betamax was? I know what a VHS is. I used to watch like Disney movies on VHS, but I never knew Betamax was a competitor to VHS. I never had a Walkman either. I had an MP3 player. I had a CD player. I never had a Walkman. I think that was more like in the 90s or 80s. But in the 2000s, I did have a CD player. But I never had a Betamax. This is it for those that don't know what it looks like. I had plenty of VHSs, but never looked at the Betamax stuff. Anyway, that is what we got. Hoover is the real word of the day. I'll be back probably 3 p.m., 3:15, a little bit early to cover whatever Trump's saying in the executive orders. And then we'll go from there to end out the day. All right. Thank you, everybody. Appreciate it. I will see you guys later today at 3 p.m. on the market close. Bye, everybody. Have a good one.